for joining us at day 2 of a Digital Payment Week by PayNet. And today we are looking at Payment Innovation Showcase. So who is coming for the first time for Digital Payment Week? Who was not here yesterday? No, I saw some similar faces. Please tell the truth. Who was not here yesterday? Okay. All right. So thank you so much for joining us on day 2. Yesterday we looked at Everything Payment Summit, and we looked at a lot of speakers, a lot of sharing sessions, speaking about the current trends, challenges, and the innovations that we ought to do in the digital payment industry, and how Malaysia can be the hub of the digital payment innovation especially. Speaking about a lot of trends and challenges brought us to an understanding that, as much as we are trying to innovate and be tech savvy in a lot of areas in Malaysia, rural areas especially, but keeping in mind the importance of humanizing, being human in that sense, humanizing finances and making it easy for everyone. It's the key in that sense, I would say. So, are you all ready to begin day 2? Yes, a bit more louder, please. Yes, all right, perfect. So just a few housekeeping rule before we head to, introducing the speakers and start off with BANG, the Payment Innovations Showcase. Right, to ensure a smooth and uninterrupted event, I request everyone to kindly switch your mobile phones into silent mode so we do not have any alarms ringing or any phones ringing. But if you need to take your calls, please proceed outside. You can do that. And please wear your tags at all time. And we are also live streaming our event online on PayNet's YouTube channel and Facebook. You can visit www.paynetweek.com if you like to watch the streaming online as well. And the Wi-Fi address of the facility can be seen over there at the back near the door. It's called public Wi-Fi. So if you click public Wi-Fi with the password of lab, L-A-B 12345, then you will logged into the Wi-Fi already. And with that, we highly encourage you to tag us on social media platforms. So take as many photos, videos as you could, and please tag us on LinkedIn, Instagram, and Facebook as well. And remember to hashtag PDPW as well. Can we do that? Oh, a bit later, the response, but okay, we are getting there. All right, so if you have any questions, please reach out to us. But most importantly, please ask questions to the speakers if you have any questions. So it is an interactive session, and it's a two-way communication, and that's how conferences will be beneficial for everyone in that sense. All right, so yesterday we had a set of bankers, a lot of bankers, and fintech experts as well. So today I want to ask how many fintech startup experts in the house? Make some noise. All right, I'm going to do this again. How many fintech startup experts in the house? Make some noise. Yes, a bit better. Okay, thank you. I'll come back to making that, cheer later. So I'll give you all some time to warm up in the morning. Right, so first and foremost, let's give a huge shout out to the organizers of Digital Payments Week, none other than PayNet. Let's give a huge round of applause for organizing this amazing event for one whole week. PayNet is Malaysia's national payment network and infrastructure for the country's financial markets. And like I mentioned, if you are taking any photos, take a selfie with the person sitting next to you. She just cracked up. When I asked her to take a selfie, she went like, I caught my eye, so I kind of paused a bit. So yeah, please go ahead, take a selfie with the person next to you so you can post it out about how you feel about attending today's event. I think that's what mattered to us the most. All right, so before we get into the showcase, let's hear an opening remark from a successful serial entrepreneur himself. He is all set to share his journey and insights on successfully leading 2 fintechs in US and his observation on Malaysian landscape especially. And of course, his dreams and vision as the leader of PayNet on how PayNet can shape the innovation culture in the country. So without further ado, ladies and gentlemen, please help me in welcoming the Group CEO of PayNet, Mr. Farhan Ahmad.
All right, thank you, and good morning, everyone. I'm just making this enthusiasm up because I'm dead tired from yesterday. It was a very long day. Having said that, thank you all for coming. Hopefully, we have an amazing day in front of us. But I will ask for something first. I was in Australia a few weeks ago on a vacation, and we went to SeaWorld. And when we went to see the show, seal show, the first 2 rows were always empty because of the splash zone. So I promise you, this is not a splash zone. Please come closer so we can have a more intimate discussion. We can have a better engagement, and we can actually have a chat. We're small enough here. We chose this venue so that we can have a very intimate discussion and not a traditional, typical presentation. So I wanted to, for people who were here yesterday, we had a pretty powerful day yesterday. We talked about a few different trends. So today we're going to cover a little bit of a recap from yesterday. And then I shared a lot of my fintech views from yesterday and advice from yesterday. So I won't go back into that. And it's actually 4 startups, 2 that I'm proud of, but 4 anyway, that I've done. And then we talk about Malaysia. Today we'll talk a little bit about the state of pay in Malaysia. And then I wanted to contrast it with a well-known success story, which is India. And where we are and how do we benchmark against something that people will acknowledge is an unmitigated success story in the world. And then the last part is we'll talk a little bit about what's going to happen the rest of the day. It is an exciting day today. So I think this is going to be a lot of fun. So let's just jump into yesterday. So we had 4 tracks yesterday. The first was some stuff that I said as not so important, but really I wanted to share a few things, some general advice around what I've learned having gone through 4 fintechs. So I've worked at the largest bank in the world, JP Morgan Chase, and the smallest company, which is a startup, and everything in between. So I was sharing some of that thought. But really we shared about PayNet's 5-year strategy. And it's actually quite simple. We're going to strengthen our foundation. We're going to upscale our core products, make them easier to use. And we're going to build value-added services on top of our products to make them all much more accessible for our participant network. And these are very high-level, broad-brush things, but beneath them is a series of initiatives that I'm happy to share with you guys. Not today, not right now. But we delved into this a little bit yesterday. The second thing we talked about was shaping the future of digital payments. It was a great panel, and it was really a lot of the focus was around cross-border and CBDC. And of course, CBDC is infancy, in its infancy, so lots of buzzwords, but I think the answer there was we wait and see what's going to happen. But we talked about the importance of security and having a zero trust policy and the importance of regulation, harmonized regulation to promote cross-border. Then we talked about a real case success story of how can we actually accelerate e-payments at a state level and all of our efforts with the state of Kedah in Malaysia to show what it would take to actually promote something if we were that focused. Because one of the big lessons I had from my startup journey is focus is everything. You can't do 4 things well at one time, only one thing. So we went deep into Kedah, and we talked about the combination of policy, incentives for merchants, incentives for consumers, value for consumers, that all came together to make Kedah a pretty good success story, going from almost no e-payments to a pretty significant market share of that. And we highlighted the need for offline payments, which I think is something very much that PayNet is always looking at. How do we actually enable e-payments when there's no connectivity? And then we went and talked about the B2B innovations. And we really spent a lot of time talking about confidence, addressing those needs. We talked about how rural e-commerce is very, very low right now, and how do we accelerate that, and delayed payment terms, and really talked about if you go out into the countryside, today the process of onboarding a new merchant is very manual, very labor intensive, and takes ages. And that's simply not a scalable model in any version, right? So there's a clear problem that was highlighted, and we talked about that. And the last thing is we talked about Malaysia as the hub for digital payments innovation. I think ultimately that's a big reason why PayNet is here, right? We want to make Malaysia the hub for digital payments innovation in Asia. Today is an ambitious goal. In 3 years, I guarantee you it will not be an ambitious goal. So we talked about really, we have some talent, we have all the ingredients in the country. What we don't have, that we're really hoping to change, is partnership. In every country where e-payments have thrived, the banks and fintechs are partners, not enemies and not competitors. We're a stage earlier than that, so we have to move to that stage. And that's kind of a little bit of the journey we'll go through. So that was yesterday. It was really engaging, lots of great speakers, lots of good conversation, good questions. We ran over on just about everything. Second part I'll talk about is a little bit of the state of the state. Of course, some of this gives you a state of the state on Malaysia, but I wanted to share some data as well. And there's a ton of data that I can share, but I wanted to just call out a few different trends. This is comparing Malaysia to our Asian neighbors as well as a global comparison as well. And there's much I can read into this data, but we chose to pick up a few things that we still prefer cash and COD much more than everybody else. Now keep in mind, when you do averages, we're comparing to averages. And the goal for Malaysia, as far as I'm concerned, is not to be average, but to be the best. So if you did compare to the best, we would be significantly skewed in one direction. But cash and COD as a payment method is still very prevalent, and there's really no reason for that to be. Secondly, I think e-wallet share of payments, we're really lagging. And I think we talked a little bit about why. And my most simplistic hypothesis for why is that we try to store value in e-wallets in Malaysia and fintechs in Malaysia. And that's not a model that has worked anywhere else. Normally, fintechs don't store any value. They are a pass-through. And I think I will keep insisting on this as a key to successful fintech explosion is to be a pass-through and not holding funds. Holding funds can only add problems, only add regulatory oversight, only cost you money and hassle, and none of the benefits. There's almost no money in it. In fact, it's a loss center. And the last part was a significant amount of account-to-account payments in e-commerce. And as a general rule, if I look at this data, the data is data, right? You have to have insights. The simple insight that I have is that through the pandemic, we forced people to use e-payments, and they did. After the pandemic, they went back to cash, which means it's not good enough. See, it's one thing if you can't get trial. It's very different if you got trial, and then they switch back. That's a clear statement that actually cash is easier. There's no reason for that. So I think we'll talk a little bit about that and how do we code things. Why account-to-account payment? Why do we not pay somebody through the QR? Why are we paying account-to-account? What is missing, right? And of course, I can give you a lot of hypotheses and my reasons may differ from your reason and your reason and your reason, and we can debate this. One way I thought we could talk about it is in context to what I would consider a really good success story, widely acknowledged globally as a really good success story on e-payments growth and adoption. And that's India. And so Livgwan and I spent a few days in India recently, and we met with their national payment scheme, we met with the Reserve Bank of India, the central bank there, we met with some smaller wallets, we met with Google Pay, we met with some SIs and some other sort of payment processing companies. And we got a pretty broad view of what's happening, and I have 1,000 observations, but I'm going to try to distill them into something smaller and something more easy to talk about. But the first thing that I noticed is that from a product and infra perspective, we're the same. Exactly. Bless you. But we are the same. And if anything, actually we have more. Actually, we have a few more products than what is widely acknowledged to be the best payment system in the world. So actually, we have more. So that was a shock to me because I thought we must be missing something. Something this must be wrong, must be missing. It's actually not. We have it, product by product, API by API, architecture by architecture. We dug deep into the system, and we have it all. But their growth is massive, from 0.1 billion per month in transactions to 8+ billion per month in just 4 or 5 short years. There's 2 things that I found amazing about this. One, that this happened. 2, that everybody that we met, from the smallest company to the biggest company to the outskirts of the company, every single person we met in India knew this number. I said, did you know NPCI now does 8 billion transactions per month? I said, how do you know all this stuff? I bet you most of you don't know what PayNet volume is, right? Okay. By the way, we're pretty good. We're over 5 trillion in payments last year, and we are 15 times the national GDP. So the percent of GDP, India is about 40%, we're 15 times. So we're actually quite good in that front. But what the clear distance was, everybody that I met, even though they're regulated by the same way by NPCI, and the regulation there is much stronger, not one person thought of them as a regulator, or they all thought them as a growth agent. Said, oh, because of NPCI, we can do this. The dialogue in Malaysia is quite distinctly different. It's more of a, oh my God, I can't believe there's more regulations to put up with. So I tried to take my thousands of bullet points and concisely summarize them into a few different groupings of what I thought were the true drivers. This is just my opinion. They don't have to be the true drivers. But the first one was government and central bank intervention. Fundamentally, the first thing I noticed is that they have a national digital ID that a government agency has built called Aadhaar. And that underpins everything else. It is the single digital ID that everybody has, whether you're a kid or an adult. You were manually enrolled, village by village, town by town, personally, in person, enrolled into this Aadhaar system, and now they all have a digital ID, and that underpins the entire financial system. They have very strong mandates around everything. Because to build something at a national scale, it's not okay if everybody's swimming in their own lane in a separate way. It's synchronized swimming. And if you've watched any synchronized swimming in the Olympics, it's very rare to see one person splashing around this way, another person doing a little twirl dance, and somebody else doing something else. You have to do the same thing. Very specific price control. And very specific, but the term that they used, the central bank used there was, do you remember the term? Yeah, something, it was basically right-sizing regulation for each party individually, right? So if you don't pose a threat, no regulation. If you start posing a threat, more regulation. If you pose this much threat, shut down. Okay? So I think that was a very, very key driver, right? They were very clear about it, that without this, when I asked them point blank, what do you think is the reason? They said, this. Without this, nothing could have happened. Okay? Then merchant. So I was trying to figure out what is the issues that are causing great merchant uptake. Why can't we see the same level of growth? I mean, we see great growth too. We're about 20% year-over-year growth, but they were 150% year-over-year growth. It's a different scale. Even though they are starting from a bigger base, the growth percentage is higher. First was zero MDR, which I think everybody admitted was a mistake, and I'm not a fan of zero MDR, but anyway, that was that spurred a little bit of the growth. But really, it was about easy onboarding. If you're a small nasi lemak vendor, your onboarding should not be the same as Aeon. Right? It should be a different process. The different requirements, different risk rules. So it's pretty much automatic, instant, immediate. Then POS tools, and this was an amazing thing. A very, very simple POS tool example that I think both of us were very fascinated by is something simple called a soundbox, which you have built for Paytm. A soundbox is in every stall, you have a QR code, and you have a soundbox. And when somebody pays, you don't have to check your phone to see if the payment was there, or check their phone and take a picture of their phone, or whatever the dance that we sometimes have to do. When somebody scans and pays, the soundbox says, 25 rupees paid. That's it. That's all it does. It's Wi-Fi. It's over-the-air connected to your account, to your bank account. When it's shipped to the merchant, it's already connected to your bank account. When money goes into your bank account, Soundbox says money's in your bank account. So everybody has trust. Nobody has to bother with other dances. Nobody has to scan your phone. You don't have to show your phone. You pay, Soundbox says done, you walk away. It's dirt cheap. And everybody has it. And it's phenomenal success there. And then add-on services. Because there's zero money in payments, zero. There's no MDR. There's no interchange. Zero. But Paytm is break-even now. We're the largest fintech, and that's the one I know of because it's public. It's almost break-even. And all the money comes from value-added services, whether it's short-term loans or insurance or using the data for different purposes. So that was the merchant adoption story, which is very straightforward. There's no magic. There's no magic trick. It's just providing a service that's better than what you have today. That's it. And it's very clear. And yesterday I mentioned in a startup world, when you start a company, you better be 10x better than whatever you're trying to displace. If you're 1x better, it doesn't matter. Who cares? You have to be 10x better. And this experience is 10x better. It was very obvious. Okay? Then on the consumer side, so what is driving consumer adoption? They already have a bank. It's already working. What's driving consumer adoption? And it's very simple, user experience. Every single step that does not need to be in the user journey that causes friction is eliminated. There's a maniacal countrywide focus on consistency of user experience and simplicity of user experience. So whether you use PhonePe, Google Pay, Paytm, it's all the same. It's going to work the same way. Your QR is going to be one step, pay, done. There's no extra this ID, login, check the amount, check a checkbox, no dances. It's all the same. So if you're a user, it's consistent. Everything is easy. It's everybody understands proxy payments because it's managed by NPCI. So if you ever want to see what account is my phone number connected to, it's easy to see. Which here I know is quite difficult. Actually, even I don't know how to check which my phone number is connected to what account. And so that hasn't taken off here. Service has been existing for a while. We just don't use it because nobody knows how to manage it. But there the interface is very simple. And it's all driven by the fintechs. So this 0.1 billion per month to 8+ billion per month, 95% of that, so 7.6 billion of that, is from 3 fintechs. PhonePe, 50%, Google Pay, 35%, Paytm, 10% on UPI alone. Right? 3 fintechs, no bank. So I said, wow, aren't the banks just, I was going to say some bad words, so I'll just tone down my language, weren't slightly unhappy about this issue. And they said, no, the banks and fintechs are partners because the fintechs don't hold any funds. They're not doing what the bank does. Bank holds the money. Bank is a deposit institution. Fintech is the user experience interface. They're good at defining better user experiences that banks are just generally not very good at. Banks are very good at protecting your money and the compliance layer. And it's a great marriage. And when you think of it as a partnership and a marriage, you go, I can contribute this. I'm really good at this. And the other person says, I'm really good at this as a marriage. But if you say, no, we're going to compete on every front. But, it's a very different story. But it's all fintech driven, and the banks love it because their deposits keep going up. And they don't have to lift a finger to do it. Somebody else does all the work for them. The fintechs love it because they have data. And they can use that data to build better products that a bank is generally not interested in. When there is no reason why we can't have this here. Zero reason, except a decision that we have to make that we want to do this. No other reason, okay? Market consistency, one QR. You cannot have the QR placard dance that we see here or Singapore, right? You can't have the 8 different things, the reasons for them. Some merchants I talked to, they say, oh, I use it for decoration. It looks very nice. My counter was pretty ugly, so I put the placards, very nice. I have the 8 different QRs. And sometimes you have the same QR. You click one QR, it shows the merchant name, ABC Juice Company. Great, I'm having juice, perfect. The next QR says trading company. Go, oh, because the names were wrong. So there's no consistency in data, in how we record merchants, how we show merchants. So consumer experience is confused. Why I'm having a juice? Why is it a trading company? Who am I paying? Where's my money going? Is it the right place or no? No, one. No option. This is the mandate. There's no question if, then, I like this, I want this, this person did this, they gave me a free T-shirt. So Grab will go, so hey, I got a free ride. Somebody will say, no, I got a free T-shirt, so I put a placard. But in the end, by competing on acceptance marks, we are suppressing here e-payments adoption in general. Tech consistency. So I said, listen, you're doing 15,000 TPS. Right? We're doing 600 to 1,000 TPS at peak. So how are the banks and all the participants supporting this ridiculous amount of volume? Surely they were not built for this. So it's a mandate. They have to. They have to invest in technology upgrades to meet the minimum standards that the government has said you must meet. And if you do not meet that standard, there's no, hey, bad guy, bad kid, please make sure you do okay. Shut down. No more business. If you don't meet that requirement, you're done. You're locked out of the system. There is no business. And because it has to be this high-speed availability and consistent technology across everybody, including fraud services, everything is mandated. You don't have a choice. If you're a participant, you must offer kill switch. You must offer these fraud tools. You must do all of these things. These are not optional. If you don't do any of these things, you cannot use the system, right? But to do all this stuff, you can't connect in random ways and use old technology and TCP sockets and whatnot. 100% API-only connection. There's only one layer, one way to connect, and only one way to get information back. And I think we have almost 0% API connectivity, or a little bit, that from participants. We have mainly connectors, different sockets, different connections, 6 platforms, 50 different connections on each platform, thousands of permutations of connections that can go wrong. Despite that, we're actually way more reliable than NPC. On the uptime stat, we're actually significantly better, right? Significantly better. But whereas I ask those people, say, aren't you like upset about this? I go, no, no, it's part of the journey. We're trying to do something big. Some things will fall through the crack. But I think here, if you go 1 minute down, everybody's in uproar saying, how can this possibly be down, right? I think it's that support of each other and understanding we're on a journey to build something new is very, very important. And the last part is this thriving startup ecosystem. Like I said already, banks and fintechs are partners. They are not competitors at all. 95% of this value add has come from 3 fintechs. Just absorb that for a second. 5 years ago, PhonePe did not exist. 50% of that, that's 4 billion, is just them, one company who does not touch money. All they do is provide better UI, UX. That's it. But the UI, UX is phenomenal, right? It's effortless to pay anybody in any way, and the reporting is effortless, exactly how you would like it to be. There is no extraneous step in anything. Every touch keystroke is carefully thought through. And having done startups, right, that attention to detail is critical. Sometimes people say, okay, it's just one more click, what's the big deal? No, one more click, right? If you use an iPhone, there was a whole story, and you follow the Steve Jobs story, is even the chipset had to look pretty, even though nobody saw it. That maniacal level of detail to make everything amazing and no compromise has to exist for this kind of a system to exist. Lower regulatory burden. If you're a small startup, you just get up and running. There's no regulatory oversight. There's nothing to do. You're on, build. Because they said, look, 90% of them will fail. Why am I bothering wasting my time regulating these people? They won't make any dent. Let them go try. And once they become relevant, we start to watch. Once they start to threaten the system or be significant enough, so the 3 that I mentioned, okay, then we do a little bit of regulation. But it's proportionate regulation. That was the word I was looking for. Proportionate regulation. Based on the exact threat that you pose, your regulation should differ from the next party who is different, right? And again, like I said, the biggest other thing is there are no people who want to store money. Because like I said, store money has only downsides, no upside. Now, historically, when we don't have the real-time system, I get the value of stored value, right? Because you have to make things faster. But now when we have Do It Now and we have all the rails that we have, I think in Malaysia also there's really no reason to store money. We can accomplish just about everything. But it's being a pass-through. and connect in through the real-time rails, connect through APIs, move things really fast, provide that amazing experience that people need, provide the experience that a Sabahan might need in Sabah that's different than somebody in Kedah might need in Kedah. Customize. These voice boxes that I talked about, right? Different languages. If you're in Tamil Nadu, it's in Tamil. If you're in Delhi, it's in Hindi. It's whatever the language of the region is. It's fully customized. And the soundbox is such a great example of something that costs 100 rupees, which is like 5 ringgit, that transforms the merchant experience. Transformative. Costs nothing. Probably in the 100 rupees, they probably make 50% profit margin on that. Right? Yes, there you go. So that's great. Another source of income. Costs nothing. A cup of coffee. Right? One roti canai. Right? Not even a full nasi lemak. So maybe just the rice, not the chicken. Right? It's not much. It's pretty easy. So I think we can replicate. So I think it's not that I'm saying we have to do all of this stuff because we're a different country. We have different things. So instead of expressing opinions on what I think works or doesn't work, I just want to showcase what has worked somewhere else. And then maybe we think collectively and say, what lessons can we learn? Is there anything that we can absorb here to give us the same kind of advantages? Because nothing here is hard. Not one thing. It's just straightforward. And I think we were talking a lot on the way back at the airport, in the car, because the one fun thing about Mumbai was that we were in the car 4 or 5 hours a day in traffic. So we had a lot of time to catch up and reflect on the journeys. Is that it's just common sense. Everything is just a common sense next step. Actually, there wasn't a secret sauce. It's just everybody lining up together to say, like I said, everybody knew NPCI volume. Everybody. I can tell you, if I have my leadership meeting today, everybody in the room will not know our volume. But this is everybody in the industry was aligned with the national mandate of saying, this is a national issue. This is the pride issue. This is putting India on the map. They all wore pins. I talked about that. There's a strong level of saying, the reason domestic payment networks exist anywhere in the world, there's only 2 reasons. I mentioned this yesterday. One is sovereignty. One is low cost of operation. Right? We're working on that here. But sovereignty is very important. Full dependency on ourselves to run regardless of any foreign influences. Anyway, but that said, I'm going to wrap up by saying what's in store for you tomorrow, or today, the rest of the day and tomorrow, because I can guarantee you it's much more exciting than whatever I had to say. So we have a next group of people. All I can say are people I've known in different capacities over the course of my life. Some very close personal friends, some acquaintances. Some where we've built some track record of building some cool things in the past. Some where we hope to build more things in the future. But we'll talk about a global lens on payment trends around the world. We're going to talk about blockchain. We're going to talk about embedded finance. We're going to talk about DLT. We're going to talk about a great Malaysian success story of soft space. When I first came here, I asked a few investors, said, what is the one company that you think is the highest likelihood of success in Malaysia? All of them said soft space. So I must meet soft space. So now we're going to hear the story. So I'm super excited. Then we're going to talk about other companies in Malaysia who are actually building cool stuff. There's a bank, there's a startup that's exited, there's a startup or some startups that have not exited. And you see the variety, and you see all the fun stuff that's actually happening here as we speak, and that we can be proud of. So let's talk about it, let's share that, let's share the journeys. I think Steve met me when I first came here and showed me some cool stuff about a success story in Malaysia where it was a great exit. And so we'll hear some of those stories. And then tomorrow, we're going to do other things that are happening. There's some really, if you are planning not to come tomorrow, please do come. It's possibly something the most sort of closest to my heart. We're talking about social good, startups that are doing social efforts that are making a difference in the kampongs and the villages in a massive way, and they're trying to build communities. Super powerful, right? Because see, e-payments is a luxurious choice. E-payments is a choice when you say, I have a lot of money, should I use this way or should I use this way, right? It's not what should in your mind if you have no money. So these startups are actually working on building uplifting the economic status. And we'll talk about small business, and then finally we'll end the session tomorrow by bringing in the investors who can help make this all happen. It's a great agenda, great program today and tomorrow to really see the fun things that are happening here and to hopefully give you guys some inspiration to go and make us not the middle of the average of Asia, but better than the best in Asia and maybe globally. Because that's the goal that we're trying to do. We want to be number one. As a startup founder, number two is never an acceptable answer. It's always number one. So we're going to try to be number one. Thank you all for coming. Hopefully you'll find the next sessions very exciting. Thank you.
All right, thank you so much. Let's give another huge, huge round of applause for Mr. Farhan for his speech, please. All right, I just don't want to take up a lot of your time. I just want to jump right into what we have next. We have a special speaker speaking about a mega trend. It's going to be a mega trend session. The digital payment landscape is continuously evolving. I think we all are aware of it. And several mega trends are actually expected to reshape in the future. And the important to note that the future is uncertain, and while these mega trends are actually expected to shape the digital payment landscape. And to open the payment innovation showcase with a bang, let's discussing about future trend, of course, let's put our hands together for SVP Digital Payment Services IDEMIA France, Mehdi Helhau Hussein. Let's give a huge round of applause and welcome him to the stage.
Good morning. So first of all, I'm really pleased to be here. I'd like to thank Farhan for the invitation. I heard that Malaysia was the place to be, and the reason why I'm here to discuss some of the trends, not only in this country but globally. So to start with, so first of all, I'm Mehdi El Hussein. I'm running digital for IDEMIA, which is a payment and identity technology company operating all over the world, including in Malaysia. So I'll go through a handful of trends. I won't be exhaustive because I want to also pick your brain and see how it does resonate with everything I've heard yesterday and this morning. So the first question I ask myself, because most of my presentation will be around digital payments and electronic money. So I first looked at where do we stand on using plastic cards. And I realized that it is actually still growing. So the first learning is that payments are additive. Unfortunately, we still use cash, even though you don't want us to use cash right? Plastic is still growing, and then we see a lot of new form of payments around digital. And when I looked at those numbers, the one fastest growing segment was actually domestic cards. And we have today kind of 2 billion cards in circulation in many countries, I think in 60 countries. If you add up the cards which are co-badged and featuring 2 networks, the figure is even much bigger. And I'll come back to that because there is a reason behind that. And on the other segments, Union Pay, that number was kind of revised because most of them are used for disbursements, salary disbursements. But overall, the average growth of plastic cards is 3% year on year. So those are the figures from Nielsen reports. Then, what are the trends now on digital payments and digital wallets, which is the purpose of today's section. So you saw the number that Farhan was trying to expose. You can see all of the leading mobile payment platforms. The 2 largest by far are in China, WeChat and Alipay, collectively representing close to 2 billion users. So they have kind of spread at very large scale. Behind them, you have the US-based wallets, Apple Pay, Google Pay. You saw yesterday the guy from Google stating that they do want to leverage their billion user platforms, Android, Chrome, to scale and bring payment at a large scale. Even though I'm not that clear on the difference between Google Pay and Google Wallets. When I started, it used to be called Google Wallets, then Android Pay, then Google Pay, then now Google Wallet. Okay, that's a bit confusing, but nevertheless, the same purpose. And then, of course, you had the new kid in the blocks in India. So Paytm, PhonePe, and actually Google is also one of the participants, which have now achieved also a significant scale. And among the top 10, the last two are actually peer-to-peer platform, Venmo and the Cash App in the US. But look at that. We are talking about billions of digital wallet users as we speak, and that number is growing very fast. What are the underlying trends behind this? So number one, digital payments soared during the pandemic, especially when cardholders wanted to have touchless, frictionless user and payment methods. Number two, traditional banks. Some will think that they are challenged, but I tend to agree with Farhan. There is also a good level of collaboration which is possible between the big techs, the fintechs, and the traditional players, which are all focused on this digital-first user experience. And number three, mainly for the online payments, you can see the proliferation of one-click checkout button. Some are led by the big tech, some others by players like PayPal, but also the payment networks and the banks are also trying to federate that user experience. So that's the second largest trend, which is around digital payments and the adoption of digital wallets. So let me come back now on my first comment about domestic payment networks. The number one reason is sovereignty, right? This is the reason why they do exist, because in time of uncertainties, domestic payment networks now have three objectives: to reach technology independence, to allow payment systems to be sovereign, and to protect the data of not only their consumers, but the citizens, actually. If you look at the main advantages, the main benefits for domestic payment networks, cost, yeah, I tend to agree. Innovation can also be challenged because on one side, domestic networks, they belong to either central banks or banks. They have the mandate to operate at low cost, but at the same time to innovate, right? So they are facing this dilemma. They have to innovate to be at par with the international players, and there is no foreign exposure. So that's a key mandate. And lately, after the recent geopolitical events, notably in Russia, we have seen many schemes being either revamped or created. Even projects that were on hold were reactivated. We have example in Middle East, in UAE, in Qatar. We have example in Africa, in Nigeria. We have also examples closer to Malaysia, in Indonesia now for credit cards, not only for debit cards, and many other examples. So the figure of 60 that I mentioned, I think will grow significantly in the coming years. Europe tried also to launch a pan-European domestic card scheme. It was the European Payment Initiative that was put on hold on the card scheme, but they decided instead to launch a wallet very similar to the example that we saw earlier. This is one of the major trends in the payment landscape as we speak, and I think Paynet is a good example and the right example of the trend that we can see, and they have an essential role in the economy. The next trend. I spoke a lot about the card rails in the introduction, domestic, international, private label card rails, but in reality there is new rails being introduced, and each of them can facilitate the introduction of alternative payment methods. If you look at, you have card rails, the account-to-account instant payment rails, and then you have now more sophisticated blockchain rails, all of them coexisting with the existing cash and check, all their payment methods. And I tried to list maybe a couple of new payment methods which are growing pretty fast. The first one, when we speak about the account-to-account instant payment rails, so you are right. I think Malaysia is at par with what we have observed in India. Maybe the only difference is that they managed to kind of expose their APIs to some wallets that help them to scale. But I don't think that technically the rails and the backbone were more sophisticated. It's actually the opposite. So maybe there is also something to do here to bridge that gap. It allows also new payment methods to flourish. You mentioned about the QR code. And I think there is two things in those QR codes. Number one, unified. I heard the lady from Maybank yesterday saying that having one QR code was pivotal for them to serve their SME segments. You need as well those QR codes to be interoperable, not only domestically, but also cross-border. And this is the example of what Malaysia, Indonesia, Singapore, Philippines are trying to achieve in the Southeast Asia region. And then the blockchain rails. Later on, Sharu will tell us a bit more about this technology and how it can apply to payments. We have a good example of what Facebook tried to introduce. Their first attempt was actually on blockchain with their Libra initiative and later on renamed Diem. They have faced hurdles from the regulators, which means that they had to step back. Their second attempt was actually on the instant payment rails, account to account, in India. I think the regulator may also think that they do pose a threat. So today they are only allowed for a pilot implementation. The reason why, out of the top 3, WhatsApp is not yet there. The size of their pilot, however, is 10 million. At the scale of India, it's kind of a trial. And then they made a third attempt to try and stick with the legacy infrastructure in Brazil, which was sticking with the card rails to facilitate peer-to-peer, card-to-card money transfer. So they went actually through all of them. They explored all of the options, trying to find the path of least resistance. But it does demonstrate that there are several options which may or not fit to a particular market. The last one is BNPL as an alternative payment method. In reality, irrespective of the rails that will process those transactions, which is nothing else than it's a kind of a deferred payment by installments. Whether it is introduced by the merchant, the issuer, the network, or by a third party, you may leverage one or the other. We do believe that those rails will coexist, right? The example of Malaysia is actually striking because Paynet is kind of well equipped and advanced on all of them, which means that each time I believe you want to introduce a new payment method, you will have to ask yourself the question, which one will help scale faster this the solution. So that's what about the battle of the rails. The last, maybe not the last, but the next topic is about embedded finance. And Pratyush from Gojek will tell us more right after this session. Embedded finance or embedded payments is very simple, right? You see, it's the act of for a non-financial company to seamlessly wave financial services into the digital journey, right? It could be enabled by bank as a service framework and APIs. And we try to look at the scale of it. What does it represent? And you can see that by 2030, it will represent $7 trillion. So which is twice the value of the 30 largest banks in the world. So that's significant. And there will still be a question mark that we will try maybe to answer during the panel and the next session, whether the embedded payments will prevail or the super apps that we have seen earlier will be the one to dominate. but it's a way to make payments invisible. You know, I mentioned that payments are additive. You have the cash, plastic, digital, and now I think the industry is trying to make it invisible. Embedded payment is one of the best example on how to do so. Last but not the least, and I think it was a recurring theme that will echo with everything I've heard, not only this morning, but also yesterday, which is about inclusion and sustainability. The first one is, of course, financial inclusion, and how the digitization of money is helping with this matter. If you remember, the lady from Maybank said, no one should be left alone. They wanted to humanize the financial relationship. And the example of what we've seen in India, or mobile money in many countries in Africa, prepaid cards in some of the countries to address the underbanked segments. I think that as a network, as a bank, or even those fintech players, they do have also a purpose, sometimes which could be a national purpose, to make sure that financial inclusion is part of their strategy when they introduce such payment methods. There are also ways to be more inclusive. We see that environmental inclusion is one of them. I think when they introduce a payment product, I think now it's part of the requirements. And last but not the least, the social inclusion. You mentioned about this soundbox. It's actually one of the examples. MasterCard and has launched their touch card for the blind or disabled to be able to know with which card they are paying. So there are ways to make sure that it is inclusive and that 100% of the population might be able to use those products and solutions. So that's about inclusion and sustainability. So I mentioned about the cards, about the digital wallets, the rails, the inclusion, the embedded finance, and then the last slide, which is something which I borrowed from a company called HPS that held their user meeting 2 weeks ago. They tried to map all of the technology trends in payments, and I thought that it was a very good illustration of the payment trends. You see that they have mapped it in between the business impact and the adoption timeline. And they try to segregate in between what is customer-centric, technology-driven, or what is related to the business model. On the technology side, you can see that the blockchain, the biometrics, that was the example of Hadar in India, but also all of the biometrics that we can now find on most of those mobile payment methods. The tokenization, each time you digitize a card, and you want that card to proliferate in many formats. You have also the cloud. We'll have someone from Alessio from AWS that will elaborate on that, but it is also a key enabler for the payment technologies to scale. On the customer side, we mentioned about the user experience. So that's the digital first and the hyper personalization of payment methods. You have also everything about the identity convergence, because we believe that identity and payment does intersect. Actually, identity is the foundation of any such method. You mentioned about Hadar, again in India, which is something I'm very familiar with, because IDEMIA built that database, 1.3 billion users, records, on top of which many services can be built. Open data, that's about the collaboration in the ecosystem and how to make it open to new players, fintechs, startups, all of those players to be able to consume the data from the banks. And what we've seen actually is a good example of that. And then embedded payments. So it was a good map of the business trends and the underlying technologies. So that's my take on the key trends on digital payments. After my session, we will have, I think, 4 talks that will deep dive and zoom on some of them. And I'll have the pleasure also to moderate a panel to maybe exchange views on those. Thanks a lot for your attention.
Awesome. Can we take a photo, please? Sure. So we'll take a photo. You can stand in the middle. The feature's on you today, so we'll take a solo photo of Mehdi. Ladies and gentlemen, let's give a huge round of applause once again for Mehdi for his presentation and sharing on mega trends that we are seeing today. Awesome. Thank you so much. He will come back again later for the panel session to moderate the panel session. So if you have any questions or interact with him, you can do so. And we'll now a break for a quick tea or coffee break. And just get your networking on, speak to anyone new. If you could get to know someone new, you will never know who could be your next client or partner, right? So please enjoy the tea break and be back to the auditorium by 11:15. Can we do that? 11:15. Can we do that? Okay, you all told, huh? All right. So I'll see you all back here in the auditorium at 11:15. Thank you. Welcome back, ladies and gentlemen. Thank you so much for joining us at Payment Innovation Showcase, Day 2 of PayNet Digital Payment Week 2023. So hope the tea break was great. So can I hear a huge round of applause for the showcase, please? No, we can definitely do better. A bit more energy, please. A huge round of applause. All right, this round of applause is not for me, for our next set of speakers. So can we give a bit more energy and welcome the next session? So a bit more energy for them, a bit more round of applause, please. One last round. Awesome. So the next session is going to be about payment trend talks. An interesting episode of the Payment Innovation Showcase is our payment trend talk that we are about to listen after this. It is a series of 10-minute talks on how blockchain, embedded payments, cloud solution, and next-gen full-stack payment platforms are reshaping the future of payments. So just a quick brief on the speakers that we are going to be having. This is a quick 10-minute session. Each speakers are going to be having to share with you what they have, achieved. So the first speaker, Alicio, the Principal Solution Architect, AWS. Pratyush, Head of Merchant Payments, Gojek Indonesia. Charu, Chief Marketing Officer, Unique and Network. And last but not least, Joel Tay, the CEO of SoftSpace. So one huge round of applause for the 4 amazing lineup of speakers for our payment trend talks. So without further ado, ladies and gentlemen, let's invite the first speaker to begin this. Give it up for Alicia Basso, the Principal Solution Architect of AWS. A bit more round of applause. Can we do it? Yes, thank you. Let's welcome him.
Hi, everyone. Okay, too far. Let me go back. Till the beginning, yes. My name is Alessio, and I work for Amazon, AWS. And this on the screen is the Amazon flywheel, which you probably have seen before. Who have seen this picture before? Raise your hand. Awesome. So not many, so I'll explain. This is the Amazon flywheel, which allegedly was drawn, sketched by Jeff Bezos on a napkin, and it explains why Amazon is successful. And it all starts from customer experience. The main idea is you create an amazing customer experience, and then creates traffic on your website. And of course, the traffic of user brings you more sellers. And when you have more sellers, you have more selection on your e-commerce website. And of course, more selection is a better customer experience. And all this feeds itself in a virtuous cycle that creates growth. And of course, when you have growth, you can have a lower cost structure, and then you can lower price on your customers, and this, of course, feed, again, the customer experience. So in order to power e-commerce website like Amazon, you need to create what are the drivers and the levers of a virtuous flywheel. And we think that there are, this is the same for financial services, there are a few levers that you can manipulate to create a virtuous cycle, a flywheel, so to speak, in financial services. I am not going to cover all these items, but just a few to have a few talking points for the panel and conversation later. The first one, real-time rails are not a product. So all the speakers before, Mehdi and Fahad, mentioned that just because you have a real-time payment network that allow you to move money from account to account, that doesn't guarantee that you have the same volumes that UPI in India have. Customer adoption is driven by what we call overlay services. And at Amazon, we see this working with payment providers and wallets all over Asia. Overlay services like payment proxies or QR-based collection, which can be unified and interoperable across providers. So all these services are creating the right user experience, the right customer experience, and this is what creates volume and adoptions, like a best customer experience. Merchants are also customers, and sometimes they're overlooked. Fahad mentioned before about collection, the Soundbox, and all these small initiatives that makes very easy for merchants to accept payments, not just for customers to make the payment. So this is very, very important. And of course, payment needs to be embedded, recurring, transparent. A lot of real-time account-to-account provide variable direct debit facilities, and this is, of course, what's enable a recurring use case like subscriptions or bill payment or things like that. So the first takeaway is that real-time payment alone does not guarantee the success of your network. You need to have a lot of overlay services that cater for the specific customers' problems that needs to be solved. Again, customer experience is the lever that you need to manipulate to get adoption. There are standards to do that, so we think that, I don't know if you know, but in every single browser these days, there is a JavaScript API embedded. It's called the payment request, and it's a W3C API specification that has been there since 2017. And what this does is supposed to make you seamless for a browser to invoke whatever payment app is installed on your device and just fulfill the payment. This is not very adopted very much, but standards are there to simplify this customer experience. So again, the tools are there, the solutions are there. We need to find out what the customer pain points are and implement a solution that address those pain points in real life. The other lever in the flywheel that we can manipulate is about data. So we all know that every user that they shop online, navigates online, they have a very rich data footprint. This is typically lost when you make a payment. So as a payment provider, as a bank, you don't know everything about the experience that led to the purchase, right? And it's very difficult to do because typically a bank uses different systems to process these payments, and an account system, and a core banking system, and a payment system, and a card system. They're all separated. So data silos are a problem, and collating this data, creating unified data lake, scale them, and use this data to create a recommendation, but also protect your customers and prevent fraud is very, very important. Some people said and see recommendation as a bad word. Think about recommendation not as a bank you want to sell product to your customers, but as a bank you want to offer services to improve the lives of your customers when they need it. So this changed completely the way you see these things. And we see also that there is willingness between bank and non-bank players to share data. Again, the tools to do that securely and safely are available, and it's just a matter of adoption. Everybody has been using alternative data recently to make loans. Maybe not the banks, but the super apps and the alternative players definitely. And by non-financial data, I mean everything from social to behavioral to online footprint and so on and so forth, right? A few companies like insurance has been having alternative approach to underwriting. Like they don't underwrite a customer, they just underwrite a portfolio of customers, so they don't have to basically do the whole process for every single insurance that they issue. And the API, so the UPI in India experience explained that there is an unbundling of the whole stack. So there's a lot of players that do just the origination, just the payment request origination, just the UX for the payments, and the banks hold the fund, right? So there are a lot of opportunities in there to collect alternative data, to provide alternative data sets for companies to make decisions. And this is something that companies are already doing, and we believe that there's a lot of opportunities there to add value to the customer journey in that regard. There's another trend that we see that, at the beginning, the bank wants to know your identity before making a loan, and then slowly we move to non-banks, not caring much about your identity, but looking at other features like online, behavioral, social, that are typically associated to the device that you use to make a loan application, not your identity, right? With the emergence of portable credential, verifiable credential and portable identity, we see that we are going back to the identity as a cornerstone of all these other features that you use to make a decision. Identity wallets may be making a comeback. Many years ago, there was an idea, an understanding that the telco were having your identity, they were using your SIM card, so that they were the perfect person, the perfect organization to hold your identity wallet. Now, is it going to be the bank? Is it going to be the super apps like Gojek here, where you already do like pretty much all your online and offline interaction in terms of payment and services? We don't know. In some countries, it's the national ID system, that's this digital identity wallet, Aadhaar in India, as was mentioned. Singapore has SingPass, and other countries have something similar. But yeah, the idea is that the technologies are, there are new technologies that are being created, and there are increasingly having adoption. The key, as we said before, is how are we using these technologies to solve a customer problem. A customer does not go and install an identity wallet on their mobile just because they have to, just because they want to. They do it because that is going to make their life easy in a number of different use cases. It's on us to identify what these use cases are and bring the technology to them. And will this make banking as a service less of a compelling proposition? Let me explain. Banking as a service is when banks offer their financial services as API. So non-bank, non-financial institution can weave in financial applications inside their user journey. The bank can provide this and can provide this seamless because they have a wealth of information about the customer and their lives, so they can make KYC much, much faster, right? If, because of portable credential, portable identity, verified credential, and identity wallets, the step of verifying the identity of a person becomes seamless, will that reduce the appealing of all the services that a bank can provide as an API? Probably. So let's see what's going to happen there. Another trend is security and fraud is still a concern, still problem. Criminals always go there and try to take advantage of our customers. So having a robust identity system behind that is one way of addressing it, but this can also be gained. We all see problems with synthetic identities, account takeover, fraud, and the like. So the tools that are there to address this are machine learning tools to spot patterns and identify anomalous behavior. And these tools are doing that way better than humans do. So we need to focus on moving all this security and fraud activities from a person-heavy thing to an automation-heavy activity. And there are vastly different execution speeds to do this. Sometimes we think that banks go slower because of regulation, but all the wallets or the other providers sometimes are regulated too. So how come they go faster? It's because the tool they use, it's because of the processes they use, and because they're genetically like a more agile type of organization. So it's doable. I want to close it here. Again, just a few thoughts. The call to action for us to implement a virtuous flywheel is to identify the levers that matters to the customer and focus on the customer experience. Learn lessons from your peers. We are all here. We can all share experience that we have in the industry for our customers, and experiment. I don't say that just because I work for AWS, but the cloud is like providing a lot of tools for you to experiment. You don't have to come to me. You just go online and try. And but I'd be super happy to work with you once we want to build something that is really ready to go live and change the life of our customers. Thank you.
Thank you. Please, can we take a photo? Just a quick photo session on the stage. All right, now let's welcome Pratyush Prasanna, Head of Merchant Payments from Gojek Indonesia. Let's put our hands together, please. Thank you.
Hi, everyone. My name is Pratyush. I look at merchant payments at Gojek. I should have had a slide like Alessio's talking about myself. Um, so at Gojek, we have both the consumer side play as well as the merchant side play. Consumers are wallet, where we spend, you and I spend while paying at either POS locations or online, or merchant side, which is what my business is where merchants accept payments both online and offline. However, today, Farhan requested us to talk about what we think could be the trends in payments, starting with Mehdi, then Alessio, Charumi, and Joel. So we will talk a little, or at least I will talk about what I call as shots in the dark, which is more about what I think payments will evolve into or are evolving into. Some of this will have overlap. This is not messy, but the idea is to at least give a few thought starters on what payments will look like. Sorry. Okay. So I think there was a slide before this, but in my mind, payments is like wearing pants, right, in the morning. It's very important. You can't go out without it, but you don't want to think about it. It has to be behind the scenes. You don't want to like search your wardrobe on what I want to wear, right? So payments should be, I think the slides got mixed up, sorry. Anyway, so payments should be intuitive, fast, and without too much authentication, because that's how it should be. It should be in the background, where infrastructure for payments is much more important than deciding how, and the experience for payments in a sense, right? Kind of goes against what Farhan said, but I think it's assumed that the hygiene for payments is sorted, right? I also thought I'll talk a little bit about, not to steal Charu's thunder, but I thought I'll talk a little bit about the newer avenues of how payments are happening, right? So with the metaverse coming in, and we know that the company that changed its name to Meta is not doing too well, but I'll still talk about metaverse because I think payments in other scenarios is very similar to what it is happening today. There are several scenarios which afford themselves where I think the next growth of payments would be, right? For those of you who have kids, would definitely know Fortnite. Most of our kids have either Fortnite or, one of these coins that the kids use. Then there is obviously advertising. But one of the important aspects that I thought is that the new economy, especially with TikTok and others, is creator monetization and the efficiency of that payment. And lastly, I think a lot more events like this one, and as we saw in COVID, will move online or to the metaverse, which will have event monetization, which are very different from what we do today. What will happen in that case, right? Is it going to be wallets? Again, going back a little bit to my topic, which was embedded finance, is it going to be wallets? Is it going to be fiat? Is it going to be like pay at entry? Or is it going to be crypto finally, right? Where, the technology will catch up with what people want. I think the jury is out on that one, where we do not actually know which way it will go. But my bet is that wallets especially, and I'll contradict myself later, which I typically do when I talk on stages like this, where I'll say that wallets themselves have a bleak future, but especially in the metaverse, it'll make sense to have an identity which is beyond your card or your bank account. We are also kind of iterating our way there because on the one side, there has been significant increase in terms of the hype about metaverse, which is through Facebook and through other entities. We see a lot of our universe through goggles. But at the same time, there is regulation also coming in, which is realizing that, hey, this is one part that needs to be regulated, which we don't do today. So EU came up with legislation literally in March this year, where they said that we need to regulate payments in the metaverse. And Forbes said that it will be huge, but it will not be cryptocurrencies, right? And then Meta came up, ironically charging 30% per transaction, just like Apple or Google Play Store does. But I don't think that will take off either. But the whole idea is that we are still grappling with our arms around how will payments look there. what I thought was good, and this was somebody when, this was about 3 or 4 months ago on Forbes, where it was, I thought this helped me distill my thoughts on what is going to affect how we do payments going forward, right? So on the one side, there are virtual worlds, which I talked a little bit about. And then one side, there is Web3 assets, which are generally proxies or identities of yourself. And the last one is a digital identity, which Farhan talked about. Maybe Aadhaar is a great example of digital identity. But there are intersections for each of those, which is, when Web3 and virtual worlds, you have digital objects which you can buy. Then when digital ID and Web3, there are identities which are kind of, again, proxies. And then there are, when virtual worlds and digital identities overlap, there is credentials, right? But in my mind, all of them aggregate together in form of a wallet, because you need to pay with something where you don't want to give out your identity, you don't want to give out your payment method, but at the same time need to pay. So with that context, I just wanted to kind of jump straight into embedded payments. For those of you, I don't know how many know about embedded payments or have heard about embedded payments. Okay. Okay. So there are two avenues or two ways to pay, right? One is in a super app where you go to one place like Paytm, for example, and you pay anything that you do, right? Like mobile prepaid, DTH, movie tickets, train tickets, blah, blah, blah. But this is a payment app which gives you avenues to pay. The other is where you land up at a Tokopedia or Amazon.com and you have payments built inside, right? Which is typically what is embedded payments. Just like, whether you want to be in the Marvel universe or any other universe, there is always a fight between whether super apps are going to win for payments or whether, payments are going to be an embedded part of most of the, majorly used forums, right? I think there are, again, the jury is out on that one, which is, again, ironic coming from me because I work for Gojek, arguably one of the biggest super apps in the world. And we sincerely believe that we should have all payment scenarios addressed at Insight, right? Which is why we look at bill payments framework. Why? Because all of us need to pay our bills, like mobile prepaid, water, electricity, etc., which makes recurring much more easier. So recurring payments make sure that the habit forming of users is there. Then we also link to regular use, other regular use, like for example, movie tickets, which are not frequent, frequency is kind of variable, but it's regular. Last but not the least, there is investments in insurance, because the ticket sizes there are high and some of the net take there could be higher. But at the same time, there exist scenarios which is embedding. And thank you. And there is a reason why I put Apple here, because I don't know if you guys recall Farhan's slides, but wallets kind of are in 3 categories in my mind. One is closed, which is Alipay, WeChat Pay. I'm not a big fan of that, and I think that's why they have remained constrained to China. The second is pass-through, which is, you have multiple, just like in our physical wallets, you have multiple payment methods and you pay whatever you want with. But the third, which I think is the most dangerous and we should look out for, is basically Apple and Google and Samsung, right? Why? Because they make it easier on your phone. You go and tap anywhere, you can pay on the physical. And online with Google and Apple, as Alessio mentioned, you have it in the browser object. So they basically make everybody else redundant in the whole ecosystem, especially the front-facing players, right? So, where is the opportunity here in that sense, right? I think the opportunities here are essentially what Joel is going to talk about, which is payment infrastructure companies, which is, okay, if you can't fight with Apple and Google, maybe just make the rails so that the transaction flows through you. The second opportunity, I think, is B2B, which is almost completely unaddressed in terms of enabling payments for them, whether it is B2B cross-border or B2B in the same country. And third, of course, APIs are the norm, so we have to do that. So, sorry, last slide. We talked a lot about the online. Embedded payments are typically mentioned when we talk about the online world. However, I think the holy grail is actually solving the offline use cases. Because of technology, internet, connected devices, I think the point of sale is going to be a point of interaction. Why do I say that? Because obviously smarter devices are there, but what does smart mean? Identity and loyalty built in. I think we talked about some of the key elements of identity when Alessio talked about it. With that, you can just approach a store and they will know that, hey, this is Pratyush or Farhan, right? Easy loans, this is already there in many cases, but it'll make buying decisions easier. So instead of thinking whether you should buy that refrigerator or not, you can just easily have loans there. And lastly, gamification for merchants, right? Because most of the stuff that we talked about, including even the UX stuff that Farhan talked about, are all for consumers. Nobody cares much about merchants, but there are companies like BharatPay in India which have come up, which have changed it by making sure that merchants also have a say and also have a game to play, right? I said I'll contradict myself. Why do I think wallets will be deprecated, right? I think, I mean, again, real-time payments is not the solution. However, real-time payments have made the cost of payments very low. And once, once you make it easy for merchants, they will, like for example, in India, if you take a credit card out, people will look at you, right? They will say, who is this guy? Most of them insist on UPI payments, including the guys who have like, like the rickshaws or the tuk-tuks, right? So they also insist because they don't have change, etc. But more importantly, it's just fast, take it, move it, and go, right? So I think, so the stored value wallet, as Farhan was mentioning, I think the efficacy or the time for that is already done, which is why, like Paytm or any stored value wallets are consistently moving towards a pass-through. The second one is that when they started, when most of these wallets started, right, identity was a big deal. But now with easy authentication coming in, I was just telling this to Farhan that some of the companies in our region, the KYC cost per user is about $2, right? In India, that cost is 2 rupees, which is 5 cents or something. So the gap is unbelievable, which makes that, you don't need to have an identity to pay. You can just pay with, easier modes of communication. Sorry, easier modes of payments. All right, that's from me. Thank you. Look forward to your questions.
Thank you. A photo, please, in the middle. Let's give a huge round of applause for Pratyush Prasanna for his sharing, quick sharing. And next up, let's put our hands together one more time and welcome the Chief Marketing Officer of Unique Network. Let's welcome Ms. Charu Sethi to the stage, please.
Hi, everyone. As introduced, I head up marketing for Unique Network, and I'm also an ambassador for Polkadot, which is the third generation layer 0 blockchain of blockchains. We won't go there yet. But I will be talking about NFTs, non-fungible tokens, which are unique digital assets, often tradable. And then my observations on value creation and crypto payment rails. To set some context, Unique Network is a scalable blockchain and infrastructure to power the enterprise applications for NFTs. And while a lot can be done by NFTs, we are currently focused on loyalty programs, customer experience, and engagement. And we also have an offering in development around carbon credits backed by NFTs. Now, over the decades, we've seen that culture and technology form this feedback loop where technology creates new culture, and then that culture propels change of behavior and then encourages people to develop newer technology. And culture is disseminated through content. Back in the time, often top-down, but with social media, it created opportunities for co-creation, especially on YouTube, TikTok, and Instagram. However, what we've seen is that this co-creation value flow was always from the creators back to the brand. What Web3 does is it flips that around and enables two-way value flow. what we've seen is that creator revenues on YouTube, Instagram, and similar platforms, creators are not able to audit it in a transparent way, and the attribution problems exist. The sales cycles, the settlement cycles are very long for the creators. And that's where NFTs come in. Over the years, over the last 2 years, NFTs became mainstream media, got the mainstream media attention with the sale of one digital artwork at $69 million at Christie's. And that triggered a wave of whole speculative digital assets trading. But over the last year, we've seen some mainstream brands jump into this space and create real value business use cases, which at a fundamental level are loyalty programs and loyalty campaigns. I've highlighted 3 examples here, very different. NFT made $185 million in NFT revenue. I'll dig into this example a bit later. Starbucks, a smaller example, very interesting. They launched their loyalty app called Starbucks Odyssey, and they abstracted the concept of NFTs. They call them stamps. Ticketmaster, they offer token-gated ticket sales as an option to the artists so that the artists can sell NFTs with exclusive privileges to their fan. A very interesting tool for fan engagement. Let's dive into this Nike example. So it's not just Nike, by the way. There are these 13 other brands that you see here that have generated millions in NFT sales revenue, and few more millions if they have royalties pegged in. So as an example, there is a secondary market for sneakers out there, for sneaker collectors. And that, if tokenized, can generate revenue back for Nike, which in the real world, it's not possible. So what's happening here, and how did Nike do this? Well, Nike created a 4-stage program. In the first case, they dropped NFTs for sale. These were not free. The Nike communities of customers and fans, they had an opportunity to buy the NFT with a random pricing which was associated to this digital DNA of the shoe. And once customers bought these NFTs, they suddenly become, from customer, they become a stakeholder or a shareholder, kind of a shareholder who's now financially and emotionally invested into the brand and want this campaign to be a success. And then they continue to engage the community by dropping few more free NFTs in stages 2 and 3. But then they dropped one NFT, which was a blank shoe canvas for people to co-create that shoe with Nike. So from user-generated content, co-creation on user-generated content to user-generated products. And this digitally created shoe by the community would later be available in stage 4 to redeem for a physical shoe. They again had to buy the physical shoe, but that triggers real-life sales for shoes. And all of this is happening in Roblox, Metaverse, Discord, and through crypto payment rails. So $185 million, 67,000 transactions across hundreds of countries is all happening in ETH, which is totally outside the purview of domestic money or the central bank. And while we may not have time to cover retail CBDC, but these examples, these are money systems, digital money systems that are coming up, cropping up every day, on which central banks have no view. And that is an opportunity for retail CBDCs. Yesterday, we discussed a whole lot about CBDCs to find that problem that can be solved more efficiently with CBDCs. But here, this is an opportunity. It's not a problem to be solved. So a few trends here. We've seen loyalty like never before. Subscription loyalty is one of the biggest trends for loyalty leaders. They want their customers to pay for loyalty programs. And in Nike, the customers already did. Emotional loyalty. So all those checkboxes of a successful loyalty program are there. Then the move from user-generated content to user-generated products is also what we've discussed. But then the interesting bit is the brands have always taken feedback from customers to improve their design and launch new products. But they've never been able to give social or financial recognition back to the customers. And Web3 and crypto payment rails solve that. And that's where the role of wallets comes in. And just a few points on CBDCs, which I sort of already mentioned. Multiple examples and POCs in play. We'll dive deeper into crypto payment rails right now. So the existing payment systems, thanks to all the creators and founders in the room, are very comprehensive and efficient for existing use cases. Where does the role of crypto payments come in? It's in the new verticals, which will continue to grow. And some of these are, first of all, arbitrary bidirectional payment flow. Now, what this really means is, I mean, historically, financial flows parallel data flows, right? It's very easy to get the money out of the door. You go on a website, one-click checkout, one-click payment, QR code, very easy to get money out the door. But if the brands were to reward their customers 7 working days, 30 working days, KYC, so the brands cannot pay their customers or contributors back. And that's where the bidirectional payment flow can be addressed through Web3 and crypto instantly. Token incentive. Now, all startups face the cold start problem. Token incentive design mechanism is a beautiful solution to address that initial network creation problem. You can design a program or an incentive system to reward the early community who then become a starting network effect and become your evangelists, which actually comes in a Web2 startup at a much later stage. So token incentive models, if well designed, can propel the network effects for startups. And that's a whole separate topic. We could dive into it separately, but that's an important one. Gaming is something Pratyush already discussed, but again, monetization. Steam, which is one of the major payment apps for gaming right now, charges 30% commissions. BMO in the Web3 space charges 1%. Creator monetization, again, we've discussed. Crypto-native neobanks. There are about 30 million MetaMask wallets, and a lot of people own crypto wealth now. But there are no systems that seamlessly integrate or provide a conduit to the traditional financial systems. And as an asset holder, digital assets holder, even I would love to keep my payments or my assets on the crypto payment rails, but there is no seamless way to transfer it to traditional banking institutions. And then real-time interest payments is another interesting use case. Your interest payments from the banks often are delivered to you in a month or in a quarter, while some of the DeFi protocols, they allow for instant interest payments. And now, very quickly, I want to make a point on what's happening in the creator space and the money back and flow on the websites through a crypto wallet. Now, as these e-commerce websites start to become aware of the Web3 wallet, then you can think of a whole new emerging Web3 growth stack around ad targeting, around ad exchanges that will crop up. And that's where a lot of new opportunities from a fintech point of view, from other startups' point of view, exist. Okay, the evolving Web3 wallet. Now, at a retail level, crypto wallets, they should be able to do a lot more. Originally, they were designed to address the safekeeping of public and private security keys, but they need to be a conduit for anyone to participate in the whole Web3 creator economy. Are we there yet? No. We are far from that, but there is a lot of innovation happening in pockets that addresses various requirements of a Web3 wallet. Institution wallets is a whole separate ballgame, and a lot of bankers in the room will understand these requirements better because digital assets by default are bearer assets. And that raises implications for custody, for safe transfer of assets, for holding assets. And so that's something that requires a whole amount of development effort with banks involved. Now, there are two interesting partnerships I'd like to highlight here that have the potential of being sort of big system power shifts. MetaMask and PayPal in sort of partnership. So what this allows is for MetaMask users to be able to integrate to PayPal so that they can use their PayPal account to buy cryptocurrencies. And there are about 30 million global users for MetaMask. Twitterverse, over 400 million users. And the recent announcements of Twitter around its push for their payments vision, their integration with eToro that allows people to trade in crypto assets and stocks, and then being able to share on-chain NFT profile pictures on Twitter. So these are addressing audience at scale and will have an impact on crypto payment trails, the communities, and everything else that we sort of operate in, the systems that we operate in. Okay, so this is just a representation, and I know my time is up. So very quickly, I'll mention that cryptocurrencies fulfill all the elements of being widely accessible, digital, and peer-to-peer, enable peer-to-peer transfers, except that they're not in the central bank purview. And the retail CBDCs sit right at the center of it. Now, while this pie is growing bigger, that's where the opportunities for banks and institutions lies. So I'll stop at that since my time is up. For anything else, happy to stay in touch on LinkedIn or answer any questions later on. Thank you.
Thank you very much. Let's take a quick photo. All right. Thank you so much, Charu. Let's give another huge round of applause for Charu for sharing. If you have any questions, you can ask them during the panel session later, right after this. And after this, last but not least, our final speaker for the Payment Trend Talks. Let's give it up for CEO of SoftSpace, Mr. Joel Tay. Round of applause, ladies and gentlemen.
Good afternoon, everyone. I'm Joel. I'm from SoftSpace. We are a Malaysian fintech payment company flying the Malaysian flag here today. I'm actually strategically placed as the final speaker for this session for two reasons. The organizers see me as the insurance to end sharp at 12. So I'll keep things short and simple. And secondly, right about now, the career path that you took just now would started to take effect. So I'll skip the slides and I'll put on some videos to make things more interesting. Okay? So, SoftSpace is actually operating in the payments as a service space, both as an issuer, solution provider, and as an acceptance acquiring solution provider. And since then, we started out back in 2012 as a MPOS company, and since then we have evolved in our payments solution offering, touching a little bit on issuing and also on acquiring. And I'm here today to actually talk more about our flagship product, which is SoftPOS, and how it complements our full stack payment offering. And for those of you who don't already know, SoftPOS is basically a payment solution that can be installed on your mobile phone, and it makes any mobile phone to become a payment acceptance terminal. Okay. So let me just share with you a little bit about what SoftPOS really is. So we are very happy to say that today in a PayNet event that this all started back in 2018 together with PayNet in October 2018, where we became the first soft POS provider to launch in the market with My Debit acceptance, and most importantly, we became the first in the world to accept PIN together with our soft POS transactions. And since then, we have been deploying the solution worldwide. We are present in many countries in Europe, in the US, in LATAM, Middle East, Japan, and especially here around in Asia Pacific. And we have gone on to actually power some of the biggest solutions in the world. For example, our SoftPOS SDK is part of the PayPal SDK, and we are in partnership with PayPal in 9 different countries in Europe, in US, and in Brazil as well. And since then, we have also provisioned more than 1 million devices, and we are now powering 10% of the top largest, 150 largest acquirers in the world. And I think when we first started, we started with the Android acceptance. And very recently, we have the privilege and the opportunity to work with Apple, the largest company in the world, to also offer the similar payment offering. And this is our recent launch last week. We've just launched with Apple and one of the acquirers in Australia called Tyro.
With Tap to Pay on iPhone and the Tyro BYO app, you can now accept in-person contactless payments with only an iPhone. Anytime, anywhere in Australia. No extra hardware needed. It's easy, secure, and private. In fact, it's so quick and easy you can use it anywhere. Tap to Pay on iPhone, now available with Tyro BYO. Download the Tyro BYO app today.
So this is in Australia with Tap to Pay on iPhone, and we're very proud to be flying the Malaysian flag, representing Tyro and working closely with Apple and Tyro to launch this solution. It's a very simple solution, and I look forward to answer your questions and for the panel sessions later. So thank you.
Awesome. Thank you so much, Mr. Joel. Can we take a photo, please? All right. Once again, ladies and gentlemen, let's give a huge round of applause for the 4 featured speakers for the Payment Trend Talks for today at the Payment Innovation Showcase. Right, we'll move on to our next panel session. We are going to be having all the 4 speakers on board for this panel session, and to discuss about tech for tomorrow. Right, tomorrow is not for day 2, but for the future, the tech for the future. And I also want to highlight a bit on the fact that we are very fortunate this morning to have 5 speakers with international exposure, 4 international speakers and 1 our very own Malaysian speaker that has gone international. So 4 amazing speakers, all of them need a huge round of applause. Once again, ladies and gentlemen, huge round of applause for the 4 amazing speakers. Let's get them on board. Thank you very much. And to moderate this panel, please help me and welcome Mr. Mehdi once again. Mehdi, please join us on the stage. And on the panel, let's give it up for Alicia, Charu. Let's keep the applause going for the speakers. Pratyush. And last but not least, Joel. Please join us. Over to you, Mehdi.
Welcome back. Very inspiring talks from Alessio, Charu, Pratyush, and Joel. So a lot of things to reflect on and to digest. But maybe let me start with a first question to each of you. So we went through so many market trends during the introduction and during each of the talks. But what should be, according to you, the number one priority the industry should focus on, if you have one single one? Sharu, you want to start?
Yeah, one of the most important challenges for us is mass adoption. And it covers ease of use, UX and UI. I mean, in the crypto industry, UX and UI has evolved or has improved from being flat out embarrassing and bad to, okay, this is hard, but it can be improved. So user interface and UX, UI is important. And then breaking down the technical access barriers is also very important for mass adoption, wherein we want to abstract the blockchain under the hood and just create new opportunities and new economies without really interacting with blockchain.
Nice. Mass adoption, user experience. Alessio, what about you?
What I said at the beginning is customer experience, right? So, like the example of Farad, there are a few infrastructures like the proxy service that exist in all countries, and somehow they're used in some countries, and in others they're not, right? So the reason maybe is not so evident. You need to dive deep. You need to pay a lot of attention. It's a lot of unglamorous work, if you will, but that's what allows you to solve a customer problem, right? So my idea is, let's look at all the reasons why things work in one country, not the other, and let's solve by diving deep. It's not glamorous, it's not innovation. Everybody wants to invent a new technology, but sometimes copying a technology from one country to the other still has a fantastic, incredible impact. There's no shame in doing that.
So at least you are from AWS, so very, very consistent. What about you, Pratyush? One single priority.
One single thing, right? So you are from France, so you will understand, right? One thing I passionately hate is paying taxes, right? So passionately hate. I'm sure all of us do.
I thought he would tell me about food, right? It has to relate to the payment industry.
Yes, yes. So coming to that, I think one of the things that I think we should all focus on is reducing the tax that we pay for payments, which is, I don't want to tell the two big names, but you know what I'm talking about, because we end up paying 2 to 3% for every transaction, right? Which I think maybe had its due 25 years ago when the networks were made, but I don't think it's valid today. I think that number should be in basis points, not in percentages anymore.
Yeah, you mentioned how much? One rupee?
Well, it depends. Yeah,
two.
2 rupees, 2 cents. So I think that needs to come down because of, it doesn't help anyone except for those companies. I'm not a fan of zero, like Farhan also isn't a fan of zero MDR, because people need to make money, but
So bring down the cost and make it efficient.
Yeah. French and taxes, right? So.
Joel.
I think I will echo what Farhan said earlier. Embedded technologies, whether it's in payment or not, inclusive technologies, and seamless, as what Sharu has said, customer experience must be seamless. And when you have all three together, so inclusive, it's, there are many types of payments, there are many methods, there are many ways to transact, and there's no one size fit all, and when we go from one culture to another, we do see different types of payment that works, and some that doesn't. But more importantly, I think the future is that we don't feel that we're performing an action. So embedded payments is the key.
So embedded, inclusive, seamless. This is not one, this is three actually, but a nice conclusion. Yesterday night, I asked him, which question do you want me to ask you? He said I would answer any questions, and then, but so nice. Let's continue with you, Joel, because I think you are the only Malaysian on this panel, right?
Yes, Malaysia boleh.
You said that.
I got a home advantage here.
So you said that you were flying the Malaysian flag. So first of all, I would like to congratulate you, by the way, for the recent funding round.
Thank you.
Right? So that's, I think, quite of a unique one in the Malaysian fintech space. So you've managed to design an exportable proposition with your payment solution. So what is your secret? Because I know that there are a lot of startups and fintech in this room, so they are observing how SourceSpace has developed. So what's your special sauce?
I think it all boils down to being in a very conducive environment, such as in this country, whereby we have resources like workforce that are talented, hardworking Malaysians, and of course support from the regulators as well, who help us promote innovation. But I think generally, I think Malaysians are just a very hard-working bunch of people, very talented group of people. And we started to first excel in the ASEAN region before we went global. And the reason is because we have many similar culture with our neighbors. So, for example, Malaysians speak almost the same dialect and lingo with Singaporeans. Bahasa Malaysia is similar, I wouldn't say exactly the same with Indonesia. And a lot of the cultural similarities, like we speak very well with Taiwanese, and that really helps. That really helps us to understand the market better. And the other aspect of hardworking is that, and we experienced this a lot during COVID, I can see that my colleagues are extremely hardworking. So we have early morning calls, 5 a.m. calls, because of the LATAM market. It's either 5 a.m. or 2 a.m.
Sorry about that.
You will know about that. And 9, 10 p.m., 11 p.m. calls with the US. And speaking to you, it's 5 hours behind. And we hardly have any complaints. So I think it boils down to the group of people who are creative, who are hardworking, and that we have a very adaptable culture. So that's probably the secret sauce for us to succeed.
No, I think you have all of the ingredients. So for the record, I think we partner on some projects with SourceSpace to be transparent, and I can only agree with what you've said. And we had benchmarked 12 companies in the world before selecting SourceSpace, after Apple acquired our previous partners. And I'm so pleased to see what I've seen in Australia. I used to work actually for a Malaysian fintech years ago, and the first time I met Joel and the team, it reminded me all I had experienced. So I see a lot of fintech startup, and I hope that we will see many other soft spaces in the coming years. Thank you, Joel.
Thank you.
Next is for Sharu Unique Network, the Polkadot, which is something I was not that familiar with, but it seems to be a next-gen blockchain layer. So yesterday night you told me about this layer 0 that I was not aware of, right, which is under the layer 1. But you've managed to get a bit of attention in this crypto space, right? And same question. What is your secret sauce to stand out of the crypto crowd?
Okay, so yeah, there is no secret sauce, and no secret sauce works in a bad market. So, but the thing is that I guess Polkadot is an ecosystem, and some of you may know Ethereum, which is a layer 1 blockchain on which there's a lot of application development. But Polkadot is a layer 0 blockchain which serves as a security infrastructure on which different blockchains, layer 1s like us, can build for a specific business use case. Now, one of the things, I mean, there are thousands of blockchains out there, but they don't talk to each other. And as interoperability is a big discussion in this ecosystem, that how do assets get transferred from one chain to other? And Polkadot tries to solve that problem through cross-consensus messaging, which means that by default, these different layer 1 blockchains building on Polkadot, they are connected through cross-consensus messaging, and they can be transfer of assets, fungible tokens, non-fungible tokens. That happens seamlessly. The technology is there by design. So the idea is to be able to build solutions that have longevity by design, that are designed for future, that are designed for mass adoption. And those are the things that we are focused on. As a very specific example, our blockchain, so our SDKs and tools, they're all in JavaScript. So any enterprise organization looking to use NFTs for loyalty or customer experience and engagement, they don't need to hire blockchain or Solidity developers. Their existing teams can do it once they understand the tools. So I guess those are very basic technical decisions that you make early on that continue to take you forward even in bad market conditions. Pricing is a totally separate thing. Valuations are a totally separate thing. But I think the build phase, the build design keeps you moving through highs and lows.
Thank you. Fascinating. Pratyush, I kept hearing about embedded payments, right? Which will become second nature. But I have maybe a controversial question. For you, you said that you were contradicting yourself, right? So Gojek is a super app, right? And so first, I wanted to understand what motivated your company to go that route. And is according to you the future of payments? Is it a super app of payments? Or is it the embedded finance and payments that you just presented? So where is the future lying, according to you? As Gojek or as Pratyush? You can you can choose which one. Answer the question.
So just to answer the first part of the question, right? I think Gojek was an iterative exercise when we started with actually with bikes transport. And then we realized that the same technology can be used for cars. Uber was doing it in the US. So we had cars, then food delivery, and now we do like whatever, Mart, anything that moves, right? Then we realized that we are paying these payment providers a lot of money. So that's why we brought almost all payments in-house, including creating our own wallet, which helped us because two-factor authentication, especially with OTP, is a pain, right? So that's why a stored value wallet made sense. That's why we started with that. That evolved to where we are today. And then we also were pretty deliberate about acquiring companies. So we acquired a payment gateway called Midtrans. We acquired an offline payment company called Spots or Kartuku. And then, so it's been very organic. As you keep on extending your kingdom, you keep on acquiring more stuff, or you keep on doing more stuff or acquiring more stuff, right? So that's the story for payments, for Gojek overall. And now we merged with Tokopedia, so we are arguably on-demand services, plus e-commerce, plus payments, so conglomerate, big company, right? We still pretend to be a startup, but we're a big company. So now I think the question is, where will it go from here, right? The short answer is we do not know, and I don't think anybody else knows either, right? Embedded payments has taken off fantastically, which is why companies which are primarily in embedded payments, like for example, Uber has Uber Wallet. That is not a payments company, no chance, right? But it has Uber Wallet. Amazon has Amazon Wallet in India, which is primarily passed through. So because we are a big company and we have the luxury, when you don't know what to do, you do both, right? So we are doing both, which is we are both an embedded finance company as well as a payments company, and we're trying to experiment and see which takes off. It might so happen that both of them will take off, or both of them will be used because you know, as Joel was also talking, the good thing about our region is that the unmet demand in the market is just too big, right? And especially if you're a big player or a first mover, you always have that advantage, right? So I think that's what we will leverage, which is try on both, see which takes off, put more, you know, eggs in that particular basket and see how it goes from now on. I mean, from a Gojek point of view. Now, if you abstract it out further, yeah, I think embedded finance being seamless is where some of the future lies, irrespective of Gojek or not. But I think to the extent possible, we will experiment with both and see.
Good answer. So the jury remains out on that one, and you are hedging your bets, right? Nice one. Alessio. So AWS. So
Do you want the secret sauce of AWS?
no, you gave the recipe earlier, right? And I saw that you were consistent and very disciplined in delivering that message. No, I saw a stronger presence of AWS in Malaysia, and notably in the financial services space. Tell me more about your commitment to that market.
So he was referring to the investments and the announcement that we made of a region in Malaysia. And when we announce a region in Malaysia and investments, we don't announce just a data center or a bunch of data centers, right? The idea is that we bring infrastructure into a country because we want really to make to help all the companies in the country to be more successful, right? So the buildings and the servers and the communication lines are just one thing, and everything else that we do day to day with companies like yourself in the country to create new economic opportunity is the other part of it. One thing that we did in Indonesia is called Laptop for Builders. It's like a massive program that we did to train, I think like 500,000 people in cloud technologies and prepare the cloud engineers of tomorrow, right? So the idea is we are a company, we want to make money. As Prithvi said, that the MDR cannot be zero, but the investment is not specific on infrastructure. It's the same for the customers, right? You have the infrastructure and that doesn't necessarily give you adoption. We bring the infrastructure, but what really brings us adoption is create a partnership with the companies that are trying to grow the economy in Malaysia. So that's the angle, and that's the reason why we come into countries, and Malaysia is one of them.
So happy to hear about your commitment. I know that Paynet is running a few of their applications on your cloud, and they are looking forward to repatriate them, right? Thank you, Alessio. By the way, you are on record, huh? Just for the Joel. Next one is for you. So we say that you have proven to have this exportable proposition. You were deep diving on tap on phone, right? And we've seen it has been successful and proliferating in many markets, including the Australia market. You told us earlier that in the early days with the work you've been doing in Malaysia, but why the uptake is not yet there in your home turf, right?
I think I'm very lucky that Farhan covered it earlier in his slides. So when we deploy tap to phone globally, the regulators, the marketing arms of companies, the card schemes position tap to phone as a low-cost SME product going out to SME merchants and micro merchants. So when this is actually deployed in the States and in Europe, they have a very suitable KYC program to actually onboard the merchant. They have the right tools, they have the right mindset, they address the risks correctly, as what Farhan mentioned earlier. You don't expect the same set of KYC for Akar Nasi Lemak, for example, versus a tier 1 merchant here in Malaysia, because the risk and the payment size that we're processing is completely different. And with that, we saw an explosion of uptake, right? In 9 countries in Europe, when we partnered together with PayPal, we saw uptakes from window washers, independent cab drivers, and even something called pub crawling. This is very new to me, but it's being used for pub crawls, right? And it's not going to be possible for the same set of KYC to be implemented here. So we experience 2 ends of the spectrum in the States, and where we just roll out with Venmo about 2 weeks ago. Together with the Europe deployment, we have already seen more than 1 million provision device for tap to phone. But in the other end of the spectrum in Malaysia, we're having an uphill battle to actually design a suitable KYC together, in which we know the ingredients for it. But to change the culture of onboarding, to change the mindset and the risk approach for financial institutions, to really onboard these smaller merchants. And this is the first step for us to do it. And we have seen incredible results once the right approach is adopted. So we partnered with PayNet to do a simple SME merchant onboarding program. And within 1 month, we onboarded 2,000 merchants. And this was completely down to us working very closely with PayNet. And at the end of our discussion, they say, just take the IC, just take the identity card, and that's good enough. That's good enough as a document for someone to actually be onboarded as a merchant and start out right away. And like what Farhan mentioned, just observe what's the volume, what's the impact. If they're not big enough to cause a threat, then you don't have to react with a huge amount of response, right? So we did that, and subsequently we just onboarded merchants with just IC, our ID card, which by the way is made by IDEMIA, and to have a bank account. So an ID and a bank account, and within 9 months, we've onboarded 30,000 merchants. And that is something very likely within half of the total merchants or what a financial institution is doing in their entire portfolio, and we did it in 9 months. So I feel that it has got a lot to do with KYC and how we look at risk, how we approach it, how we look at the impact of what these merchants can do, and balance the experience of onboarding them. That's the key.
Very, very interesting, actually. Merchant onboarding, the KYC, the proportionate risk approach. So you believe that those are the ingredients to unlock the
Yes.
next level for that solution?
Yes, very strongly.
In your home market. Thank you, Joel. Let me follow a logical flow. A question for you, Pratyush. So, SoftPOS has made it much more easier to create business apps with payment functionalities, right? Compared to the constraints that we used to face with payment processes in the past, tying business apps and payments opens new possibilities. Are we going to see the point of sale becoming a point of interaction? What's your thought about that? Going to when we talk about embedded payments, there is the consumer proposition and then the merchant proposition.
Right.
I'm on the latter.
Right. No, I think a few stars are aligning now, right? One is, as Joel said, so Joel, as background, I used to work for a company called Point in the US, which was one of the first smart payment terminals. So I know the challenges, that's what Mehdi is also talking about. I know the challenges of having business apps and payment app on the same terminal, right? Because it is pain, right? Because you need to have level 1, level 2, level 3 certification, and then every time you change code, you go through that full certification process, right? But now, last year, once PCI changed, I think that's what the question is, which is you could do soft POS, which means you could just take any device and have payments separately and have business apps run on it. I think that's going to be a game changer because on the same device, whether it's an Android phone or a tablet, you can accept payments, primarily tap to phone. But what are the stars that are aligning, right? One is NFC payments on the issuing side is increasing, right? Without that, of course, this won't take off. That's definitely one factor. And with phones like our Samsung or iOS phones, right, consumers can pay. That's number one. Second is, with lower cost of KYC, you can onboard merchants, hopefully all automated at some point, right? Like, I think I was telling this to Farhan, that in India, the cost of KYC for merchants has reduced drastically from almost $20 to maybe $2 now, right? KYC for merchants, not consumers. That I think is a game changer because then you can do it online, you can do it through voice, you can do it through fingerprint, whatever else, right? So that's the second part. Third, I think the data between payments and business apps is also being shared, which means you can do, the business apps can do a lot of things around where is your inventory going to run out? Is your table being occupied? What time is your table being occupied? Blah, 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 right? I think these things will make sure that instead of two silos of functioning, which is payments only, which was looking at working capital, etc., and business processes only, which is looking at table management, you could tie in and build new systems without worrying about some of the hygiene factors. I think it's, I think there will be new companies which will be built on top of this.
So that's a very promising area. Thank you, Pratush. Alessio, many of those players, and you are familiar with that, are adopting the cloud. What's, according to you, the main reason a digital payments company should adopt the cloud technology?
So there are two aspects, I think. And one is an enabler, and the other one is a concern that gets addressed, right? On one side, all the solution that Pratyush just mentioned, we call them just merchant analytics, in a way, are things that are extremely easy to do with the tool that we provide. Imagine just collect all the data about the payments, all the interaction, all the cash outs, all the inventory that a small shop have, and imagine not having like a cloud software to do that. It's just like complicated. And we also have very simple ways to do things like prediction, forecasting of inventory. Like as a shop, you don't want to over-order, you don't want to under-order, you want to get it just right? In the past, this used to be like a lot of very expensive, specific software that you need to buy. Now it's an API that's out there. Like we provide it, other providers have it. So for small companies, startups like yourself, it's very easy to embed and add all these additional functionalities to the POS, as a point that the POS really become the operating system for the business, right? So on one side, we make it very easy to do these very sophisticated use cases that really bring value. To your point, if a business have nudges and piece of information that tell them how are you gonna grow your business, 5% more, 3% more, what inventory can you rotate so you sell more, how can you change your opening hours so you get more footfall, and all this type of information. Yeah, it's the whole, every party in the ecosystem benefit, right? So one side we make it very easy to do that. On the other side, we are also very reliable. So there's a big conversation from the regulators and the central banks about if we put all these payment systems in the cloud in one provider, is it going to be reliable? Do we have the right business continuity plan in case something fails? And we are addressing, like regulators are asking out these questions, and payment providers around the world are answering. We are answering these questions, right? So on one side, we make it easy to solve customer problem and customers and be merchant. On the other side, we work to do all the unglamorous work and make it very, very, very reliable. We don't get this is not visible work, but it's a very fundamental block of the whole thing.
Okay, so interesting. Two things. Make it easy. You mentioned about the analytics, the value-added services, reliability. I think it echoes what the Farhan mentioned this morning with the uptime and the critical systems that has to be processed. But this is not where I was driving at, right? So I think you were avoiding the answer. You know that because you were answering on the business apps. Now let's go back to the payment functionality. You know that payment processing requires some very stringent security and compliance requirements on one side. So that's number one. And then number two, we said this morning that there are growing concerns around sovereignty and data localization. So basically my question is, how is AWS addressing that?
So I remember it was Charu, and she mentioned that Unique Network is doing a lot of work to abstract the underlying blockchain, so that you know, as a user, you don't interact with it, and as an application developer, it's API calls, right? So you don't have to worry about the consensus, the transfer between blockchain, and things like that, right? So I think that the job that we're doing to make security compliance easy, it's similar in conceptually. As a payment processor, you need to be PCI compliant. You have like a lot of standards that you have to comply to. We certified our systems, so we make it easy for you to certify your application if you build using these building blocks. That's the first thing, right? And the second thing is we provide an easy way to get things like cryptography, okay, data encryption, control where your data is stored, having advanced payment crypto functionality like that are available on Payment HSM, available as a service in a way that's scalable and to use just an API to call, right? So the same trend that Charu mentioned about creating abstraction layers. So to a point, and I'm not saying that we are removing this completely, but to a point, we make it easy for you to be compliant and to be secure.
Okay, that's a good answer for the security layers and how to abstract that complexity. What about the sovereignty and data localization? Each time you're trying to avoid half of the question, right?
Okay, so I just don't want to hoard the space, but there is one thing that as Amazon we do, which is the data sovereignty pledge, which is about committing and providing tools to you as a customer to control where your data is stored and make sure that it make it easy for you to comply on your data localization requirements. So we can catch up during the break about what this is in detail. And again, I don't want to monopolize the conversation, but it's a very, very important topic. The fact that we are launching a region in a lot of major economies in ASEAN and Malaysia is the one that's coming next. It's part of this commitment. You know, we realize that there are requirements and needs, and that's how we're trying to address it.
Perfect. It goes back to my first comments on your commitment to to these local markets. So good transition to Sharu about the crypto payments. So during your presentation, you talked a lot about the new opportunities created by those new verticals, right? And how it can be addressed by crypto payments. Once the website become wallet aware, right? What does the new user journey will look like in the e-commerce space?
Yeah. So websites becoming wallet aware is when the crypto wallets are sort of a browser extension or they're connected to the websites. Now, in that case, what's happening is the on-chain identity and on-chain wallet data is when it's married to the website data or in-app data, then there are more opportunities for affiliate ads for ad tracking units and things that happen today where Google routes traffic based on search volume and keywords onto the website and charges the website for that. In this case, and once the traffic goes on the website, then there is no way for the website to understand the customer behavior and even retain them. Now, when the website is integrated to that crypto wallet, they understand the data because it's on chain. And if this user has claimed a Nike NFT before or has spent money through that wallet before, the website knows that this is the user we want to retain. And a lot of things around ads being targeted, around rewards to stay loyal to the website, rewards to keep coming back to the website, all of those transactions can happen directly with the customer. You don't need to wait for Google to bring the traffic back again on the website. And so this creates opportunities for new ad exchanges, privacy-enabled ad exchanges, which will enable direct reward to the customer, to these ad exchanges. So now there is a new sort of user journey that the brands can engage directly with the customer as well as offer them more rewards. So what this does is this creates new payment nuances and ideas which a lot of you may be able to see better than I can, what it takes for payments, what it takes for identity. And there is a lot of conversation around identity in blockchain where the blockchain transactions are transparent, but at the same time you want to preserve identity, and how do you do that? So there are opportunities around that, around KYC, for example. Like KYC, the requirement is not to know the customer, but the requirement is to know that the customer is known. And so there is a lot of work around zero-knowledge proofs where the identity can be validated and yet abstracted. So I think there is a mix of payments and fintech and identity opportunities, new opportunities that are arising due to these crypto payment rails.
Interesting. So a lot of opportunities exist for the fintechs in this room to rise, right?
Absolutely.
So the maybe the next question is still for you. More on the loyalty part, right? You had a very interesting slide with what Nike and Starbucks and some others are doing. What do NFT enable for loyalty that did not exist before with the current loyalty programs?
Yeah. So since I've been in conversation with quite a few loyalty leaders, customer experience and engagement leaders, the top trends and challenges for them are that how do we move past the transaction loyalty? We give them rewards, we give them discounts. As long as those rewards and discounts are attractive, or as long as they use them, fine. Otherwise, they forget about it. They're not affiliated. They don't feel attached to the brand. And the second trend is a lot about gamification, that how do you keep the customer hooked onto the app? And I remember a few years ago, Grab had this really simple, silly game in its app, and I would just be hooked onto that on my commute because I was on that app. So it just, gamification is one thing. And then what Amazon Prime has done, you pay for Amazon Prime, right? That's subscription loyalty. So there is a lot of push to generate some revenue out of loyalty programs as opposed to it being a cost center and hoping for customers to be engaged. Now, as you saw in the Nike example, the communities actually bought that NFT, the first NFT they bought, which gave them access to whatever was coming next. And in most cases, they didn't know what was coming next. It's that anticipation that's built. And the fact that these NFTs are tradable, they knew that anytime they could flip it, given the market conditions, and make money off it. So that emotional connection, the financial sort of opportunity keeps them hooked on to the app. Now, but what's also to recognize the fact that crypto markets are very volatile. If Nike was to do this now, they may not make $185 million, right? So this is not a sustainable business model, but it opens up more ideas around how this can eventually translate into a more sustainable business model. And earlier this week, another brand called Pudgy Penguins, they made news. They started off with NFT sales. They were a big hype, and then they sort of were very quiet because of the market conditions. But then they launched the physical twin of their NFTs on Amazon, and that collection was sold out. I mean, they made $500,000 with the toys, the sale of those toys. So it's actually marrying the emotional engagement with financial recognition, and then sort of linking it to physical real-world utility, that's where I see these loyalty programs going, and hopefully these brands will find a more sustainable and long-term solution for loyalty.
This is mind-blowing, right? Those NFTs. I think I'm going to do an NFT of your T-shirts. Don't use cash, la, or use crypto, la, will be the next one. Joel, going back to you, I was listening very carefully of your introduction. You mentioned about your play on both sides, issuance and acceptance. We all know that payment is a dual-sided ecosystem, same at Gojek, right? You are going for a full-stack platform, right? What can we expect from SoftSpace in the near future? 6 to 12 months, which I know for you it's a long period of time.
Actually, before the pandemic, we seen two major growth. One in the contactless space for offline payments, in-store payments, and the other one is in in-app payments and embedded payments, in-app payments and web SDKs. And we have been growing that separately. So we have been successfully growing our web and in-app payments as a platform, as a payment stack in Taiwan, where we work together with Cathay United Bank, and we power the likes of Family Mart, Starbucks, Watsons, 7-Eleven. So we've seen explosive growth there, and it's difficult to say this, but because of the pandemic, it really just propelled contactless payment. So it's one of those things that actually benefited us, and we've seen the growth, exploded, since in the middle of the pandemic, where we have people who are reluctant to dip the card in, or they start spraying. They start spraying on the terminal every time they touch the keypad, and the terminal went bust. So I think what we've been seeing in the past couple of months is convergence, bringing the two technology, online and offline payments, into one single platform, and we've been seeing that more and more. So in markets like Malaysia, we have started acquiring clients that use both ends of the platform, and they use it very effectively because e-commerce transaction has been seeing phenomenal growth. And now that we are able to go in-store shopping again, we have seen a lot of merchants start combining both of the experience and realizing the true potential of O2O. Before that, it was just a buzzword. And we've also been completing, other payment providers' service offering. The keyword going around is omni-channel payments. So when we, for example, PayPal, we are embedded into their SDK. So our SDK is in their SDK. And wherever they go, for example, with Venmo, with PayPal Go, with Zettle Go, with PayPal Business and Zettle Go, we are a part of their complete payment offering, whether it's online or offline. And we started to see the trend going more and more towards that, that a full stack payment doesn't now just mean a full online service provision, but it combines, both in-store and e-commerce payment. And I think before that, like I mentioned, O2O is just a buzzword. We don't really see a seamless experience, but now, we see a lot of that happening, not just with Shopify, but a lot of companies, emerging, taking advantage of that kind of experience. Yeah.
So the convergence between the offline and the online world,
yep.
I think the lines are now blurring, so this is where you are
yes.
heading at
yes.
and driving at. My last question will be to Pratyush, but then after that, I would like to open the floor to some questions in the crowd, to any of the panelists, myself, or even Farhan. So you have a couple of minutes to think about a sharp and clever question. Pratyush, so you will conclude at least this part of the panel. So we mentioned about linking of identities between the merchant consumers and payments, right? You said that it will open up new avenues for monetizing the data, right? But then the next question would be, who owns that data, right? And how it can be shared among the stakeholders, because we are saying that payment is now embedded into business apps. And what about the framework for this monetization? Because I believe it's a fundamental question which still needs to be addressed. So what are your thoughts on that topic?
So that's definitely an unsolved problem, right? We do not know. We know that the data needs to be shared, should be shared with controls, but we do not know how to share it. So there is no PCI equivalent of payments in data sharing. Newer scenarios are coming up with O2O, right, or omni-channel, where the same customer or merchant might take payment from the same customer online or offline. And then again, the risk is that, especially for OEM-based wallet like Apple and Samsung or Google, they know everything about you, and they're not, like Apple will definitely not share data, right? So I think it has to be a mix of industry plus regulation, government, etc., because there is no standard about it. The best example we have are closed ecosystems like Alipay and WeChat Pay, but that's not an example because we don't live in that ecosystem if you're out of China, right? I don't think that's I think that definitely needs to be taken care of because there are no set standards there.
Thank you, Pratyush. So a problem that still needs to be solved. We still have a couple of minutes, and thank you for the reminders. And I will now open the floor to some Q&As. So don't be shy. I've been told that Malaysians are vocal, talkative, smart, and sharp. Who wants to ask the first question? If not, I will randomly pick someone, right? Any question to the panelists, to Farhan, to myself on the trends, on what you've heard, on things which has been unanswered according to you, or avoided, right, Alessio? If not, we will still be around during the break and more than happy to follow up on any of those. So thank you very much, Joel, Pratyush, Charu, and Alessio for this very inspiring panel that I had the honor to moderate. Thank you, Farhan, and the Penet team for this opportunity and for your attendance. Thank you.
Awesome. Let's give another huge round of applause for the amazing lady and the gentleman for the panel session. Let's take a photo. Can please come forward? Let's take a photo. So everyone, I encourage you to take the photo as well, so you can post it up as well. It was a very informative panel featuring 4 international speakers and 1 our very own Malaysian speaker who has gone international. So thank you so much for that inspiring sharing, and remember to keep your postings up on your social media platforms as well. Remember to hashtag PDPW. Thank you very much. Awesome. With that, I'm sure you're hungry. Your stomach is making some noise. Am I right? No? We're good? All right. So we'll break for lunch, and we'll come back to the auditorium back at 2 p.m. to resume our session. We have amazing showcases, amazing speed pitching sessions are available, all ready for you to listen to after the lunch. So, get set and come back with a stomach full of food, full stomach to listen to our amazing sharings after the lunch. So please enjoy the lunch, everyone, and the lunch is served at level 3. And if you are looking for surah to commence your prayers, it's located at B1. And please proceed to the northern entrance of car park elevators for easier access. All right, and if you have any questions, our crew will guide you as well. So please enjoy the lunch, and I'll see you at 2 p.m. Thank you. Good afternoon, everyone. Welcome back. So the lunch was good, I guess? Good? Good, y'all enjoyed the lunch, right? So I think we're waiting for a few more people. The crowd is not, completely in. The lunch is so good that they want to continue eating, right? I think more than the eating, we all love talking. We all love networking. It's nothing wrong, but that's why we are here to talk and get to know other companies, and I enjoy seeing that a lot during the lunch event. So once again, to begin our after lunch session, we'll do some interaction first before I invite up next what we have. So a quick intro, we have amazing showcases for you from PayNet's participants and their innovations. So that is going to be happening after this. After that, we also have our speed pitching session. So it's going to be a quick and interactive session after lunch. So you can be, change the gear a bit and get ready to listen to those showcases as well. Right, so to begin with, I wanted to, warm up you guys a little bit. So yesterday during the summit, if you were here, I asked Laura or Lorraine? Lorna, okay. I asked Lorna to come up here and share how she feels about the summit and all. And I think she hated me yesterday, but now today we are friends. So we got connected after that. And that is because I saw her coming, the very first person. The moment I got into the auditorium, she was the very first person to be in the auditorium. So I thought she was very punctual. So I invited her up to the stage and we shared a bit of a moment there. Thank you. And thank you. Please give her a huge round of applause for her, for having that courage to come up to the stage, for sharing the stage with me. So now I'm going to ask again for day 2. Is there any volunteers who'd like to join me on the stage? No? Anyone? No, I won't kill you on the stage. I won't eat you. I'm very friendly. So anyone, any volunteer, can I please have one volunteer to come and join me on the stage? Nah, this is when everyone will look at your phone. I can see literally everyone is on your phone. Your heads are looking down, right? So should I pick? No volunteers? Usually when I host conferences, right, usually I'll add this one additional rule in my housekeeping rule, that you must ask question, must be willing to do things voluntarily. But with you guys, yesterday at Everything Payment Summit, day 1 of, PayNet Digital Payment Week, I didn't have to do the rule, I didn't have to announce it because all of you were asking questions very interactively. So I thought I don't need the rule today, but y'all are very quiet today. So I wonder why. Y'all spoke enough yesterday, and we also have some new participants today. So I'm bringing the rule back to be open and ask as many questions as you like. So keeping that in mind, I still want a volunteer to come up and join the stage. No? You can recommend a friend. I know you are more than happy to ask your friend to go. Then, no? Let me look around. I saw this one lady. She was here yesterday, and she is here today. And when I asked that if she's the first person, if they are new today, I asked if any new participants today, she raised a hand. And I was wondering, is my eyes lying? I feel like I saw her yesterday. So I'm going to call her. Please, join me. Yes. Come on, please. Hey, give a round of applause, please. Now we'll investigate whether she was here yesterday or not. Or my eyes were wrong or what? Microphone, please. Hi.
The truth, I wasn't there.
You were not here?
No.
Okay, literally, I saw someone exactly like you.
So maybe my face is nice and familiar.
Yes. I saw someone exactly like you, so that's why I was wondering, I saw you yesterday. Why is she raising a hand today? So, apologies. Come on, please. step forward. Please introduce yourself, where you're from, your name.
Okay, I'm Sucheta. I live here in Malaysia. I work for the EMV industry. So we are a software provider to the likes of IDEMIA. Yeah, that's my introduction.
All right. So you were not here yesterday,
No.
so that's clear. I was not hallucinating.
No, no, no.
Okay. So how do you find Digital Payment Week by PayNet? And day one is done with the summit. And today's day two, Payment Innovation Showcase. We heard a lot of showcases are coming up, a lot of pitching sessions, and you heard from the speakers in the first half of the showcase. So how do you feel the program is going for you?
Okay, so for me, absolutely interesting. The reason is I'm stuck to a particular stream of payments industry, which is EMV, which was earlier more card-based, and now it is slowly moving towards more online. But this is completely a new world for me. So it's a lot of learning curve, a great learning curve. And I find it very interesting because I'm a techie myself. So yeah, it's very, very interesting. Thank you.
All right. Do you have anything else to share with the audience about what you learned or anything from the showcase?
I think everybody is enjoying over here, interacting. I think it's a great opportunity to talk to each other, understand what we do here, you know, and bring up the whole payment landscape up in Malaysia. I think it's a great opportunity. Thank you.
So did you make any new friends?
Oh yeah, I sat with somebody at the lunch.
So do you know their name?
Well, cards.
No worries, sorry, I'm just pulling your leg.
Sorry.
I'm just pulling your leg, no worries. Even I forgot her name. I invited her to the stage yesterday.
But they might be
I forgot her
irritated with me right now.
Please don't hate her. It all happens. We all forget names, right?
Yeah.
Thank you so much for joining on the stage.
Thank
Please.
you.
All right, give another round of applause for her. She deserves it for that courage. All right, like I mentioned, today, after this, we are looking at exciting showcases and pitching sessions. And keeping that in mind, like I mentioned, please keep your social media posted as well. If you're taking photos, videos, remember to post and tag PayNet on LinkedIn. And if you like to hashtag, you can hashtag PDPW as well. All right, so you can keep that hashtag for the entire week if you're joining the next upcoming events of the Digital Payment Week as well. All right, so coming up next, we will be featuring two showcases by two of our participants. So without further ado, they are PayNet, participants for their digital innovations, right? So without further ado, let's put our hands together and welcome on stage Ms. Jagjit Kaur, EVP Head Transaction Banking and Wholesale Digital Banking M-Bank. So can we have a huge round of applause, please, and welcome Ms. Jagjit Kaur. All good. How are you? Had your lunch?
Sort of.
All right, please, the stage is all yours.
Afternoon, everyone. I think this is a bit of a challenge session, right? We're all really full. So let's hope this is an interesting one. I'd like to thank PayNet for inviting me. Really excited to do this. So I'm basically a banker, right? Traditional, boring, but we actually try to think differently, think out of the box to see how we can do things. Okay, this is the clicker that Steve was telling me. Okay, point there. Technology. Yeah, sure. Okay, anyway. Basically, I come from M-Bank. We're not a very big bank. We're a mid-sized bank, actually number 6 in the country. Right? I hate transaction banking, and my KPIs are basically deposits for non-retail, trade, and also non-retail digital. So we've got crazy KPIs to bring in deposit. And the thing about it is, at the end of the day, if Our KPIs really outweigh the liquidity in the market. So the only way to meet KPIs is to move it from your competitor. And the only way to move deposits from your competitor is either you pay up, which is not very stable. Someone else pays higher, they move. Or the other method is you come up with innovative products. Right? Clicker ready?
Can someone help to change the slide manually?
I could speak about me and Steve the whole day, but okay, basically, so what we decided to do was that we decided, okay, if you guys went to Singapore FinTech 2019, at that time everyone was talking about data, data being the new oil, right? Subsequently, fast forward post-COVID, last year, collaboration was the new oil. The more you refine it, the better it gets. We were lucky. 4 years ago, we decided we wanted to collaborate. I remember the first collaboration we were looking at, I spoke to my group CEO and he said, you want to sleep with the enemy? I said, yeah, why not? Let's try it out. And it really helped. So today, we've got what is called sponsor bank. So those non-bank participants who want to sit on RPP, the minute you hit more than 500,000 wallets, you're going to sit on RPP. You still need a bank to do your renta settlement. As simple as this, right? If you have a debit card, a Maybank debit card, and you go and withdraw from an RHB ATM, basically Maybank is long because the money has not been debited from Maybank literally, although you've already got the funds from RHB, and RHB is short. At the renta settlement window, whether it's 11 a.m. for previous day settlements or 3 p.m., that's when the settlement happens, right? And with that, you need a bank to do that settlement. Exactly the same way we do it now. So what we did was that, I remember this was a meeting I attended with my group CEO, and Peter Schieser was sitting at the head of the table. And the way the group CEOs grilled him in saying that you want to bring non-bank participants onto PayNet Switch. So I messaged my group CEO and said, renta settlement, we can do it for them. At the end of the day, my KPI is deposit. All I want is for you to keep funds with me so that I can settle for you. So I'm still a partner. Today, we are a sponsor bank to 5 fintechs and pretty big fintechs, right? And we grew CASA. Did we lose anything? No, we didn't. Either way, interoperability is going to happen. One way or another, they are going to come in. So you partner them, you collaborate with them, or you lose that opportunity. So we've got sponsor banking moving for us. We were the first sponsor bank to a company called Finexus. They were the first non-bank participants to use RPP. Today we have 5. After that, we went into partnerships. I think the one partnership that we're really proud of, whatever I'm sharing today is already in the media, yeah? So we partnered with a company called Merchant Trade. Merchant Trade is, those days they were known as a money services company. Today they are a major fintech. Yeah? Today you walk into a Merchant Trade branch and you end up opening a current account with mBank. How cool is that? And everything is through APIs. And these APIs were built to actually support RPP Do It Now. So we decided, I remember once Farhan mentioned this, the RPP Do It Now is like a Lego box. I told my team, burn the box, right? Let's see how can we think outside the box in doing this. Today, Merchant Trade opens equivalent to 10 branches current account of mBank. Can you imagine that? Yeah. So you walk into a Merchant Trade branch, and what Merchant Trade has is a wallet. This wallet is represented by a Visa card. Has the ability to hold 21 different currencies. Size of the wallet, 10,000 for migrant workers, which works fine for payroll for about 3 months. Yeah. Anything above that, they have to remit it out. They have the reach to the migrant workers. We don't. We don't want migrant workers to be our customers, right? My branch head would say, I don't want the migrant workers in the branch. fine, it's okay, right? And if you're a traveler, your wallet size is 20,000. We went to the central bank and said, can we staple a current account to this wallet? Current account earns you interest. You don't need a trust account. It's backed by PIDM. The wallet doesn't earn you interest. So now the customer is an option. I get my salary, let me park it into the current account. They don't walk into our branch. They meet up with merchant trade, but they open an account with us. That's the power of partnership. Yeah. So we've actually carried out many partnerships. When we came up with that, we had calls from Grab, Boost, so many others, right? So it's one proven case, and you end up with the rest of the partners automatically. Okay, basically, what other partnerships have we forged? Basically, we know that certain things we are good at, certain things other people are good at. Why not leverage? So another KPI of mine is trade. There's a company called CapBay. Yeah, they have a platform that does supply chain financing, electronic invoices, buyers, sellers, banks, all on the same platform. Today we partner with them. We may be the 6th largest bank, but we are the 3rd largest trade bank in the country. Also partnership. So very partnership driven. And a lot of this we leverage on APIs that we have built. I think we've exposed over 70 APIs to our partners. Yeah. We also, our first API, very meaningful API, 2019 that we exposed was to a company called Rakuten. Rakuten is an online equity trader. Yeah. You can buy shares, everything online. So you go to their portal, you register. After you've registered, you actually email the statement to them, fax it to them, mail it to a Dropbox. Yeah. And because it's quasi-cash, it has to be first party, so payment has to be made to first party. So we looked at it and we said, wait a minute, there is a switch. This switch connects all the banks, right? Every particular Do It Now transaction has 2 legs to it. The first leg is the account inquiry that pulls the info, the banking info. The second leg is the transfer in itself. It's transparent to all of us. So we said, we can actually pull banking info. Why do you need to upload statement, take 3 working days to get it done? So we told Rakuten, we can do it immediately. You have 6 fields stored based on what you key in. Give us 2, we pull another 4, we match it. Launched it in 2019 December. They were doing about 200 accounts then. Moved on March, COVID hit. 11,000 transactions, sorry, 11,000, and it hit peak. 14,000 accounts were opened in April, right? So that was the first API that we exposed. Today, what do? We partner with a company called Sonic Boom. They provide, they are the payment platform behind Costa Coffee. So what we were thinking, what can we do with them? So someone said they do facial recognition, vehicle recognition, and whatnot. So we said, why don't we expose our QRs through APIs? So we went ahead and we did that too. So today, if you go to a Costa Coffee, that QR that you see on the portal is ours. We do static and dynamic via APIs as well. That is the way we've built our sticky casa. Are we messiahs? Maybe not, but we are definitely not snake oil peddlers. We grew, I think the market grew about CASA growth of 6% and we did 17. Yeah. So finally, believers in the bank, right? So today when I tell my group CEO and be the first to do consent 24 months ago, and he said, okay, today he tells me, where's your consent? Because we're waiting for the buyer banks. But you know, PayNet products are powerful. It connects every single bank. It's the switch. It's the most important switch that you have onshore. So that's how we have actually roped it partners to actually see how we can help them move money. We are bankers. That's what we do best, right? So we don't want to build a portal, but we want to be the commerce behind that portal, right? I spoke a lot about RPP already, right? We have built the APIs for our usage. We allow our customers to consume it. And I would think that we have got 90 over partners who are already running on our APIs today. And that is sticky CASA. It's not rate-driven CASA. Last year, we made triple our revenue budget that we were supposed to. OPR went up. Did we increase our OPR? Yes, we did. Did we do 100% of it? No, we didn't. Systems being systems, they do fall sick just like human beings. But the minute you cement a relationship with a customer, they're not going to leave you immediately, right? You may go wrong here and there, the system may be down, but they'll still stay with you. Right? Don't get me wrong, yeah? Our systems are not horrible. We've got pretty good systems. Yeah? But we're a bank. We have legacy systems as well. So the sexy stuff is the APIs that gets the customers in, while we still use the legacy systems as well. And the one great mover for the APIs is RPP. It's the heart of the APIs. It's good that we're connected through APIs, and with that, the bank has seen that, okay, APIs work. Can we share APIs? Can we allow our customers to consume APIs? Why not? It's also proven. So if I can have a partner who can open accounts equivalent to 10 branches, I get 3 more partners like that, I can probably close 1/3 of my branches, right? Branches are expensive. How many people go to branches? Right? So the power of partnership just grows beyond, yeah? Okay, this particular slide, a bit busy. My slides are normally not very wordy, but I do consider this. So what we've done is that we've brought in new segments, right? We have virtual accounts. Our virtual accounts are multi-tiered. I know virtual accounts are old-fashioned, right? But what we've done is that we've multi-tiered the virtual accounts, and we have multi-currency tier virtual accounts. I'll give you an example. We were thinking of looking at toll booths. Right? So today, you've got one particular toll booth. I can tell you there's 7 million vehicles going through that toll booth. Any system will crash. But if you tier your toll booth collection, let's say, for example, I'm not sure how many of y'all are local. Take one particular toll booth, Dash. Dash has got one toll at Kota Damansara and another toll at Puncak Alam Shah Alam. Yeah? So what you do is the first tier would be the company, the second tier would be the Puncak Alam, and also Kota Damansara. The third tier will be each toll lane. So to the customer is reconciliation, to me it's funneling the transactions, right? So with that, we've managed to onboard customers with very high volumes as well, yeah? In addition to that, we've also gone into looking at providing virtual accounts to companies that do collection. Our biggest customer has got 40,000 virtual accounts, yeah? They give out microloans and they do collections. So the virtual account is actually tiered by the district collector, the agent collecting, and basically the loan accounts. So that's how we work on, we've worked on virtual accounts. You see, the minute we start doing collection and payments for our customers, the next thing we like to look at is algorithm financing. You know exactly how much a customer collects and how much a customer pays. The Costa Coffee example, the QR code. Small company, you know how much his turnover is, how much he makes, yeah? So at the end of it, what happens is that we use the cash management system to track their payments as well. So with that, you can actually start selling, whether it's algorithm products, algorithm financing products, or deposit products that you would like to sell to them, yeah? So we've looked at balance sheet. We've actually done financing. We're still looking at microfinancing. We're trying to see how we can tweak it best. But we've got partners, especially the TPAs and the PSAs, who've got enough data and want to get into this. So that's something that we're interested in as well. Yeah. So we provide infra. We allow our customers to actually use our RPP and our APIs. With that, what do we get? We get proxy accounts, right? The minute a fintech, a wallet provider uses our APIs, they need a trust account. That's where our deposit comes in. Yeah? You need a settlement account. That's where the pre-funded settlement account comes in as well. Yeah? This is what I spoke about, Rakuten. This actually won us an award. Yeah? This is where we actually did the hybrid wallet. So these are some of our success stories. Other than that, we've also done cross-border QRs. Yeah, so the Costa Coffee, someone sent us a video, I think the one from Bangsa. Yeah, pretty cool. This delegate from Indonesia came over, paid 11,000 rupiah for a cup of Costa Coffee. And we've done that as well. Pretty big in our borders, especially in Johor, down in Johor. Besides that, we've done reverse QR scanning. So we've done it with recycler machines. So you find, if you go down to Jalan Raja Laut, you'll find these machines that swallows plastic and tin cans. So what happens is that you generate a QR, the machine scans your QR and actually credits money direct to your bank account as well. So we've done pretty cool stuff. And we hope to continue to innovate. We've got many more things in the pipeline that we hope we will roll out. And to us, PayNet is a fantastic partner, not because I'm standing on PayNet's platform, but that's reality of it. Yeah. With that, I would like to thank everyone. Do I pause for questions or do I pass this to Steve? Thank you.
All right. Thank you so much. Let's give a huge round of applause, please. Can we take a photo? You can take a photo, yes. And with that, I think let her take the photo, and I will invite the next showcase, participant showcase of innovation. So without further ado, let's put our hands together and welcome the co-founder and chairman of Kerlag, Mr. Steve, please. A round of applause, ladies and gentlemen. Okay, there.
Good afternoon, everybody. What's the time? 20 to 3, so we've got 20 minutes before coffee or tea or whatever's waiting for us outside. So I don't want to rush through this. I love talking to audiences such as this. But my story is probably very different to anything that you heard this morning, and certainly very different to the AmBank story that we just heard. The reason why the story is different is primarily I'm here under false pretenses. So I had a call from some of my friends in PayNet. I can't quite see him, but he's there somewhere. A week last Friday, Steve, could you do me a favor? Could you come and talk to a group of fintech startups and just tell them, you know, what you did as a fintech over the past couple of years? He said it's going to be a panel of 3 or 4. You know, you don't just be asked questions by a panelist, just come along and have a chat. I said, sure, I don't mind doing that at all. I then traveled, interestingly enough, to India. Farhan was in Bombay, I was in Bangalore at the same time. And whilst I was in India, I started to receive these emails. Oh, it's a presentation you've got to do. Your digital story, not your business growth story. So apologies, part of what I talk about is our business, and part of what I'll talk about is our digital presence in Malaysia today. And I think more importantly, what will our digital presence be at some point in time in the future? So, well, how many fintech startups do we have here? Raise some hands. Oh, it's definitely got the wrong audience. Okay, how many startups are here? Oh, 1 or 2 more hands. Okay, so let me tell you the Collect story. And why did myself and my co-founder, why did we start this business, and what's happened over the past 5 years or so? I mean, I think the first thing for any startup, whether you're a fintech or not, is you have to understand what is the customer problem that you're trying to solve. In our case, we're a B2B company, and the problem that we were trying to solve is how do we help businesses collect whatever is owing to them in a more efficient and more affordable manner. Malaysia is great at a lot of things, and one of the things we're great at is not paying our bills. Not necessarily the gold medal that you want, but it's a fact. So there is a financial product. I'm from the UK, if it's not obvious. Direct debit is a financial product which is everywhere in the UK. If you take 9 out of 10 people, 9 out of 10 people have at least 5 direct debits in their name. It's almost as though the day you were born in hospital, they wrap something around a little baby's wrist, and they have a direct debit for that health cover or something in that child's name. Everybody uses direct debit for absolutely everything. But here in Malaysia, it's never been a particularly popular product. One of the reasons it lacked popularity is because if you understand the flow of what you need to do for a direct debit, historically it was based upon a piece of paper. We call it a mandate. And when you created that piece of paper, the mandate was allowing the person selling to you to go to your bank account and take whatever money they wanted on a regular basis. Now, that wasn't just opening your account to anybody just to steal money, but by no means was that the case. But for regular bill payment, maybe gas bill, electric bill, gym membership, insurance policy, sometimes these amounts vary month by month, depending upon your consumption. Direct debit is the perfect way for your merchant to go and pick whatever is owing from your account on the day which is due. So that solves the accounts receivable problem that Malaysia is so good at. But the whole process around that piece of paper was tiresome. In fact, 10 years ago, when the piece of paper system was introduced, it may take, regrettably, 2 to 3 months for that piece of paper to go through the ecosystem and come back to the buyer with a, "I'm sorry, it's been rejected by your bank." And why was it rejected? The signature that you put on that piece of paper, the mandate, eventually that piece of paper, as a PDF or as an image on a screen, was visibly looked at by a member of the bank. And often people were just in a hurry. And when they were trying to compare that signature on the piece of paper with the signature card that you had on file, when you signed when you were 15 years old, when you opened your bank account, your mum and dad took you into the bank and said, "Right, going to open a bank account for you," the signature differed. And even if it didn't differ, sometimes the person checking was in a hurry, and the easiest thing to do was say, "It's the wrong signature." And more than 1/3 of all of those pieces of paper that went through the system came back with invalid signature. It wasn't, but the computer said no, is what we would say in the UK. Computer said no. So that was a big problem. And that's why the whole system itself was slow to take off in the country. 5 years ago, maybe 6 now, 2017, together with PayNet, I helped introduce what we call the e-mandate system. I'm going to ask this question. I hope I get the right answer. Has anybody actually done an e-mandate in Malaysia? Oh, excuse my English. Oh, shit. So even the e-mandate has not got the adoption that we were hoping for. Basically, the flow with the e-mandate was instead of the piece of paper in that story that I just told you, via your merchant screen, could be an insurance company or a gym or something like that. You would give all your details electronically, and then you would execute a 1 ringgit FPX transaction to authenticate the account that you wanted to make the payment from. So that solved this horrible problem of at least 1/3 of all these pieces of paper being rejected, and the 2 to 3 month cycle went away because it was almost an immediate authentication of your account. So all those problems were solved. Now, it's a shame that nobody here has been honest enough to say you've done an e-mandate, but we power hundreds of merchants in the country now. Insurance companies I've mentioned a few times already. Yesterday, Tune Protect. Okay, some hands now. Who's heard of Tune Protect? Ah, we get some more hands, yes. So there was a press release yesterday, in fact, a physical audience with the group CEO and CEO of Tune announcing a new product that they're providing for SMEs. And the payment mechanism, the direct mechanism behind that is driven by Collect. So we work with insurers, Stashaway, oh, more hands. Wahid, a few more hands. AXA Insurance, now Generali, a few more hands. So you guys must have done an e-mandate, because we power all the mandates for those companies, but you may not realize you've done it through Collect, because one of the business decisions we also made was to hide ourselves under our customer's umbrella. So we sort of white label the product. You don't see the Collect name. So I'm glad I've seen a lot more hands. When we started this business as a fintech in 2017, the other thing we were keen to do at that point in time is not to be regulated. We didn't want to go meet with Bank Negara. We knew the PayNet people, they were pals of ours, but we didn't want to go through the process of being regulated by Bank Negara. So we made a conscious decision at that time not to touch customers' money. We were a fintech software company. So we provided our software in such a way that the money movement went between the buyer and the seller. It never came to our account first. So we were not a credit risk for anybody, and neither were we a risk of flight. So that's how we've operated for the past 5 years. And I'd like to think that we've been pretty successful over that time. Whoops. Whoops. There we go. Just to put a bit of a timeline graphic on this. So we started, actually the first transaction we did was Christmas Day 2017. It was a small gym that had a customer sign up for direct debit. So that was Christmas Day 2017. We went with an accelerator program called Supercharger. It's not around anymore, but they helped us through our journey in that 2018 timeline. We won a number of awards, Best Fintech in Malaysia, one stage with the ASEAN Rice Bowl, Future Disruptor of the Year at the World Digital Conference, as it used to go on. I think they've sort of stopped that one now. Fast forward to, it's not obvious there, but 2019, we were processing over 320 million in gross transaction volume. And last year, processing at the rate of 680 million in terms of gross transaction volume. Our investors initially, and this is more for the startup companies here, one of our investors was 500 startups, great VC. Really glad to be involved with 500. They helped us a lot over our journey. But what happened to us last year is Razorpay of India acquired a 75% stake in our business. Razorpay of India, for those of you who are not aware, there were 3 Indian companies mentioned by Farhan this morning. Razorpay was not one. We're not involved in P2P transactions, but we're involved in e-commerce in India. We are India's largest e-commerce payments company. And I don't know if you remember, he talked a lot about everyone knows like transactions per second and the total amount of money that goes through the system. We transact over 3,000 transactions a second in India. And I think Farhan's number today was 500 TPS. I know that Tay is looking at 1,500 TPS. So we transact significantly more than the country, in India. So we're a pretty big player in that particular market. So this acquisition took place last year. And in a moment, I'll tell you what the story is for the coming years. But I said I was in Bangalore last week. So why does everybody in India know what these values are? So another question. I know no one's going to put their hand up now. Who watches cricket? Oh. So you three guys know what IPL is. So IPL is correct. And it's on right now, so let me educate everybody on IPL. It's a cricket tournament that takes place every year. It's over the space of about 2 months. 10 teams in India play a knockout tournament. And for those interested, the final is this Sunday. We don't know yet who's going to be in the final, but the final is this Sunday. So when IPL is broadcast, not just across India, but across the world, it competes with the likes of the English Premier League and some of the major US franchises. So there's more than 1 billion people watch IPL live. More than 1 billion people. And if you go to one of their stadiums, most of the stadiums have 100,000 people watching the game. It's so exciting. It's really, really exciting. Cricket's a great game, particularly this type of cricket. And when the adverts come on and when you see all the stuff around the stadium, what names do you have? You've got all the payments companies. RuPay is the equivalent of My Debit here. They sponsor tons of stuff in IPL. So everybody is fed this payments information in India. And that's why everybody in India knows exactly what the numbers are. So it's very exciting. Farhan's not here now. I'll tell him the story later. He was there last week, as I mentioned. So we process all these transactions in India. And if I think about where we're going to go from here, whilst we were an unregulated business, we're now going to transform ourselves into a regulated business. And shortly, in the next few weeks, you'll see press releases and press announcements regarding Collect, which is number one, being licensed by Bank Nagara. Number two, becoming a direct participant of PayNet as a non-bank member of PayNet. Now, all that is possible because of the investment that Razorpay have made in us. And just for some budding fintech startups out there, I won't give you the specifics of our financial deal, but I can tell you that some people that invested with me in 2017 have walked away with 20 times the money that they invested in us in 2017. So some heart. I know, I can't remember which speaker said this morning, oh, it was Farhan actually, 90% of the fintech startups will go bust and 10% will continue. I'm glad that I'm in the 10%, and I hope the other fintech guys out here are also in the 10%, and you're not part of that 90% bucket. But the key thing is understanding what a customer problem is and then presenting a solution to that customer problem. Now we view customer problems in a completely different way. Not just direct debit and replacing that paper process, but how we help customers with anything to do with money. I can say this now because my banking friend is gone. In all honesty, fintech and banks should be partners. But what will we be bringing to Malaysia? It's what we have in India. So in India, Razorpay is a bank. It's a neobank, meaning the capital comes from somebody else, but we do all the processing for the business, whether that's making collections or receiving collections or making payouts. It's called Razorpay X. In India, we are a lender. Razorpay Capital is our lending business. And we lend to the merchants that we support. So we have over 8 million merchants signed up with Razorpay. So it's a big customer base. We can see what transactions come in. Actually, this point was made earlier. We can see all the collections that those businesses made, and then we can make decisions in terms of lending to those businesses. So we're a payments company, we are a neobank, and we are a lending company. And I think in time, you'll see Collect transform itself in the years to come in the way in which we've transformed ourselves in India. So a little light moment now. I hope this is going to work. We talked a lot about India. I've talked a lot about India. Farhan's talked a lot about India. So maybe this is what is coming. Volume. Do you want to rewind that and at least have some volume? Obviously not, because they're not listening to me.
Can we have the volume?
least you get to see the video twice.
Yeah, the visual twice, now the audio.
So just whilst he's organising that, this is a little light-hearted. I just thought I would throw this in at the end, considering so much has been said about India and Malaysia today. You can try and run it again. Technology.
Yeah.
Okay, another question. Who speaks Hindi? Oh, so we've got a few people will...
Okay, the video is coming, I think.
Oh, must be a big technical problem.
Yeah.
पापा ने कपड़ों की दुकान शुरू की थी और मैंने दुकान को कर दिया डिजिटल। पर दुकान को ऑनलाइन ब्रांड बनाने के लिए बिजनेस को स्मॉल से एक्सेल बनाना जरूरी था। तभी आई फाउंड रेजर पे पेमेंट गेटवे एंड इट फिट लाइक ए ग्लव। फिर रेजर पे गेटवे ने जीता कस्टमर्स का भरोसा और मुझे मिला ट्रैकिंग, रिफंड्स एंड सेटलमेंट का सिंपल सॉल्यूशन। और ऐसे ही इंडिया का ट्रस्टेड पेमेंट गेटवे बन गया मेरे सक्सेस का गेटवे। So our business is busy being trendy.
रेजर पे लगाओ, बिजनेस को बिजी बनाओ।
Sorry, a little light-hearted. Just thought I would throw that in, considering we've been talking about the two countries too much. So we will be bringing all the products that we built in India. We'll bring those products to Malaysia. So this is a e-commerce, be it cards. UPI in India is the do it now equivalent here. They're a few years ahead of Malaysia, but we'll be bringing that product to Malaysia as well as taking all the direct debit work that we've done over the past 5 years and enhancing that with new products that come from PayNet. The new terms will be called something like consent and auto debit, and maybe with Ambank will be the first combination that release those products in the country. So with that, I thank you. It's 3 o'clock and the doors are opening at the back, and tea, coffee and snacks, I think, are available outside.
No, we're not going for break.
Oh, you're not going for a break? Oh, I can talk for longer then.
All right, thank you so much, Steve. Let's give a huge round of applause for Steve, and we'll take a photograph. And that is the wrap for our PayNet participants at Digital Innovation. I think we heard two participants sharing their innovation. Thank you so much, Steve. All right, I'm sure if you are wondering why I say no break, so apologies on that. We moved our break to 4 p.m., so we'll proceed with our pitching session, our speed pitching, session 1. And then after that, once we finish it at 4 o'clock, you guys can go for your lunch after, tea after that, okay? Right, so with that, let me please welcome our speed pitching session. So are you all ready? Are you ready? Let's roll your sleeve and get ready for our pitching session, all right? So today, this pitching session is going to be, we are going to be wrapping up with this pitching session, day 1 of Payment Innovation Showcase, right? We have lined up these innovators to showcase their fintech startups that capitalize technology to solve common pain points for a frictionless customer experience. That's what this is all about, right? Without further ado, let's welcome the CEO of Leasy, Mr. Siu Ming Yan, to the stage, please.
Hi, good afternoon. My name is Ming Yan, and I'm the CEO and founder of Leasy app. So today, let me introduce you to Leasy app. We split the bill the lazy smart way, right? So the trend, the bill splitting is actually on the rise. Look at the recent articles written, right? About half of the users surveyed by Forbes says that they are willing to split the bill in a new way due to the recent inflations. And there's an ongoing debate whether should men and women split the bill during the dates. And for those people who has agreed to split the bill, about 1/3 of them say that they are not willing to split evenly. They want to split according to what they have consumed only. We split our bill when we have meals with our colleagues, when we travel with our buddies, share our house bills with our housemates, and also attend group recreational activities with our dear friends. Bill splitting is challenging because it's a very daunting task to split accurately, and we always have that friend who always forget to settle up conveniently, right? And then tracking who has paid and who hasn't paid over time is challenging. And of course, there are different types of bills that require different type of bill splitter. For example, there's an itemized bill and there's a non-itemized bill. For payment app perspective, right, you want to have a lot of transactions happening and the size hopefully bigger, and then ideally keep massive deposit inside your account. Well, that is happening after pandemic where they are getting more and more acceptable, right? Digital payment has been on the rise, sharply on the rise. But every time the user make payment using your app, there's an opportunity to get the money back from those remaining people who's supposed to settle up. But if you don't split the bill properly, then they will be forced to use external apps like spreadsheets, a calculator, or Lisi app to split the bill. Then after that, they will settle their payment elsewhere. So that represents a captive market leakage ongoing. And our solution is an integrated bill splitter with proprietary receipt scanning technology. With this app, you can scan the receipt and then it will automatically extract the figure out for you so that you don't have to key in manually yourself. Secondly, it splits all type of bills in any types of scenarios. For those people who always forget to settle up conveniently, there's a auto reminder for you now. And for food place randomizer, I think this is our daily problem, right? At least 90% of us will be wondering today where to eat, right, among our colleagues. So we have a randomizer to solve your problem. And we are working within the PayNet ecosystem to make sure there's a seamless payment settlement after we split the bill under using the Do It Now request feature. A little bit more detail about how our feature. Okay, we actually eliminate manual entry using this scanning, so you can see we can actually identify the numbers and then you just tap on it. Don't need to key in anything anymore. We are internationally ready. In Malaysia, we have service charges and they are usually taxable. And in US, they probably don't have service charges, but they have tips and that's generally not taxable. So no matter where you are in the world, Lisi app is ready for you. So you can use it anywhere in the world. And for those circumstances that require low trust environment, for example, your housemate who are strangers to you, or you happen to travel with a friends of friends, right? And they want to see the breakdown, how you split the bill. So we actually can cater for such environment. And of course, apart from randomizing your food places nearby, soon we're going to randomize promotion. So imagine your other half, say, this year anniversary, you settle, okay, you decide. And then you're like, oh, you have to think where to go, right? And then we actually can randomize some promotions that's for your anniversary celebration. Okay, that will shortlist and you can get some deals out of it. Well, how the Do It Now request work with ours, after we split the bill, just with the phone number, okay, the one who's supposed to settle up, okay, so one person advance first, then supposed to get the money back, right? The person who's supposed to pay back the money will receive a request from their payment apps. Can be a bank apps or can be an e-wallet app, okay, participating banks and e-wallet. They will get notified and then they will just need to approve on the app and then you get released and go into the receiver's account. It's just that simple when it comes to payment settlement. Our roadmap, currently we are a bill splitter, but we have ambition to become a personal finance super app to solve our daily personal finance issues. Currently we are working on adding e-wallet functions and also Do It Now request feature, right? And after that, we're going to help our users to track their budgets, right? Make the budgets and track seamlessly, right? That's the important key point, just by using our app. And after that, we're going to have a personal finance decision calculator, whereby if, let's say, you have to come to this place today, do you drive yourself, or do you take the e-hailing, or do you take the public transport, which there's a KTM nearby, right? So you have many choices. So imagine having these options compared in that app and help you to decide, and maybe accounting for your time cost as well, right? Or another example is if you have to get a place to stay, do you rent or do you buy it? So these are the calculators that we help you to make visual projections so that you can make sound financial decisions. Why personal finance super app? Well, it started with my origin stories, right? Basically, I got scholarship to study in London, chemical engineering, and I have 3 other younger brothers. So if I'm not careful with my spending there, my parents will have to fork out some money, and then my brother might not get to, study what they want to study. So I have to be very financially disciplined. So for 6 years, I actually manually record every single expenses. 4 years during university, another 2 years after I graduated, because the habit continues. But eventually it got too tiresome that I stopped. But I think eventually with Lisi, I hope that one day we are able to complete that whole process seamlessly, right? So that it's not so much effort to be financially disciplined. We always get compared with our competitors. Our biggest competitor is competitor S. They also have receipt scanning, but only at premium subscription. And they are very easy to start. But if you have to split bill regularly, you'll find that Lisi is much more efficient to help you to get things done. And also, we also get compared with the built-in function within payment apps, meaning that payment apps always have their own bill splitter. Those can cater for easy, evenly distribution payments, but anything more complicated than that, you will find Lisi a joy. Basically, the message is today, this year, we are very busy, many milestones to cover. Management team, basically I have 2 more other co-founders, Kelvin, 15 years of experience in software engineering, and Tiffany, 6 years of bread and butter marketing, online and offline. For me, myself, I actually had a change in my career. I'm a self-taught coder, so I have 4 years of experience of mobile app experience. Prior to that, I was doing 3.5 years of corporate investments. So we welcome any collaborations in financial literacy initiative because we want to enable youth to practice good financial decisions and also to achieve financial discipline seamlessly. Well, we won the accelerator program last year by PayNet. And then these are the media mentions that we're lucky to have. We are looking for some marketing partners, basically those booking platforms who want to reach out to those invisible group purchaser. Basically, if you are booking or purchasing platform, you know who is the one who make the purchase, but there are some purchasers behind the scene that you couldn't see. So as a bill splitter, we have visibility of that, so we can help you to reach out to them in a legal way, of course. We're also looking for smart money. Our ideal investors will be the ones with the current ecosystem that we can add value to their ecosystem. And of course, F&B merchants who wants to draw more foot traffic into their doorsteps. Finally, I think Lisi aims to become a personal finance super app that starts with splitting money, help you to make settlements seamlessly, save money, monitor your budgets, make good financial decisions, and there are many, many more futuristic features that I think I'll reserve it for next time, right? So the journey of endless opportunity actually starts with a leap of faith with us. So I would like to end my speech by thanking PayNet for giving us the opportunity since the moment we joined the accelerator program. They have been supporting us not only just financially, but also has been opening doors to the fintech world through the various networking opportunities that was given to us. And I can honestly tell you that Lisi app will not achieve what we have today without PayNet. So thank you very much. And also, and also I want to thank Finexus for helping us to extending their MyZest program. to us so that we can accelerate our development very fast. So finally, feel free to scan this QR, and then yeah, you can get a glimpse of the level of seamless experience we want to provide to our users. Thank you very much.
We have a video from Lizzie as well. So we can watch a video
Oh,
from
actually, I
Lizzie
thought that
right
one
now.
is going to be the before I come on stage, but it's okay.
Can we
But you
show
can
it
play
now?
it if you want.
Okay, yeah, we can watch a video from Lizzie, please. All right, thank you so much. Let's give another huge round of applause for the CEO of Lizzie, Mr. Siu Ming Yan. Thank you so much. All right, moving on forward, second pitching for today under the speed pitching for tech for frictionless experience. I'd like to invite Mr. Jason from the co-founder and a CEO of PayX. Let's give a huge round of applause and welcome him, please.
Hello, good afternoon, everybody. Hi, thank you for staying awake at 3 p.m. And so a bit of introductions on PX and who we are. I'm Jason. I'm the CEO, co-founders of PX. I think today we'll just split the presentation into 3 sections. Section first is going to be who we are and what we do. Section number 2 is a bit of progress updates. After we won the PayNet's FinTech Accelerator program last year, what have we achieved? Section number 3 is just talking about what do I intend to get out from these sessions, right? So let's jump into it. So I think PayX, so we are a licensed online payment gateway by Bank Negara Malaysia. I think we are actually a FinTech startup started operating 2 years ago during MCO time. Today, we are part of Zendit. We are a partner of Zendit in Malaysia. So for those who doesn't know who Zendit is a unicorn and soon decacorn digital payment infrastructure providers, builders in ASEAN. Today, with very heavy presence in some of the key ASEAN countries, such as Malaysia, Singapore, Thailand, Vietnam coming soon, definitely Indonesia and Philippines, right? And that Zendit present in these few countries are not nominal. We have very heavy payment activities, whether it's from a collections or whether it's from a paying out services that we're offering to the banks in those countries, right? When it comes to the annualized TPV, the transaction that the group process, we are about to cross 100 B annual TPV this year. So, and the number will probably leapfrog by a few folds in the next few years. So that's Zendit. So what about PayX? So like I mentioned, I think PayX is a fintech startup really offering 3 verticals of product and services. Product number 1, we as an online payment gateway, definitely our bread and butter is payments. So our payments consist of 2 types. The first type is the what I call is a basic payments. So basic payment is basically payments via FPX, cards, e-wallets. Those payment methods that you use when you buy from Shopee, Lazada. Then we also have the more advanced payment solutions like tokenizations, CASA on file, linking of bank account into your wallet. And some of the things like credit card installment, split payments across multiple parties. In addition to payments, we have delivery. So how delivery came about, right? It just it seems to be quite random. So because we today serve mainly the online merchant, online sellers, whether you are a next generation emerging sellers like social media sellers or just a normal traditional SMEs. The two things that you care most about when you sell online is first, collecting payments. Second, deliver the parcel out to your customers. So we kind of string this up together such that when a customer make payment today, tomorrow a GDEX truck will show up in the seller office to pick up the parcel, or in a seamless, no human interventions way, right? Number three, we have a WhatsApp shopping cart. So this is basically for a lot of our sellers today. Despite the widespread of self-service DIY website builders, they just don't want a website. They don't want to maintain a website, operate a website. Just a simple WhatsApp landing page, customer select product, make payments. So that's what we're offering. So a bit of update. So I think we are one of the winner together, I think with my friends here for the Paynet Accelerator program. Just a recap on the problem statement that we are trying to solve. I think essentially that today in Malaysia, there's really a lack of access to a fund transfer or a payout features or payout infrastructure, specifically by a non-financial SaaS providers. And let me explain a bit more, right? Throwing a lot of big words there. Take WhatsApp, right? If WhatsApp today wanted to launch a fund transfer, a payout features within the WhatsApp app, right? And they want to support allowing their customer to use any bank account in Malaysia to make the fund transfer, they have a formidable task to connect to more than 40 plus financial institution, non-bank financial institution in Malaysia to enable that features, right? Just to give you some example, connecting to one FI could take up to 1.5 years, full-to-full, end-to-end integrations with the project management. So there aren't many 1.5 years for a lot of banks and for a lot of these SaaS providers, right? And even for a giant like WhatsApp, Meta, they don't have time for this. Malaysia, small population, 30 mil. So the very likely outcome for this, if they were to launch this thing, is that they're just going to go with a few big banks. The rest, just sorry, there's no resources. They can't be doing this, right? So I think that's how we intend to come in. Sorry, let me step back a little bit. That's just WhatsApp, right? If you zoom out, there are hundreds and thousands of these kind of like SaaS providers out there. So I'm highlighting a few here. These are more for the SMEs, right? So accounting and invoicing, marketing, HR tools. So all these guys need a direct payout capability within their app, allowing the customer within their app to do a payout and fund transfer out, right? So if WhatsApp gonna spend 1.5 years connecting to one bank, what about all these 1,001 SaaS providers, right? So I think that's where we're coming. That's what the POC is all about. So we're gonna build that layer of payout infrastructure. So WhatsApp, you don't have to connect to every bank. Connect to us, we connect to every bank in Malaysia and ASEAN for you. Right. So what we have completed thus far is that, so within PX dashboard, this is a small use case I'm just gonna share with you all, that we can do a direct expense payout to a supplier, to our merchant, to our customer, directly from our dashboard without even touching the corporate banking portal, right? We can do a transaction refund for the merchants. And I think moving forwards with RPP, we're gonna make it real time, and that's work in progress. So I think this strategy doesn't stand on its own, right? It actually tied to our bigger group-wide strategy to basically build up the entire digital payment infrastructure across all the ASEAN 5 countries. I think just to share a bit of track records, today we are connected bilaterally to more than 200 plus banks across ASEAN. So we know a fair bit of amount when it comes to integrating to banks, right? So I think lastly, what we're looking for, I believe there's a lot of Paynet participants here. Really very simple. If you have the aspirations to go regional, ASEAN, right? Any of the 5 countries that I just mentioned, and you want a strong partner to support you, look for us. If you have businesses or customers that has a ASEAN-wide business operations, come look for us. So that's the end of presentation. Thank you so much.
All right, thank you so much. Mr. Jason, can you take a photo? Yep. With that photo, we'll move on to our final presentation or final pitching for today for the Payment Innovation Showcase. Tomorrow we have another speed pitching as well, so please come back for that. So today's final one, last but not least, before I invite Terry, the founder and CEO of XRPay, I think we have a video from XRPay as well, so let's watch the video. All right, let's give a round of applause and welcome Terry, the founder and CEO of XRPay.
Hi, good afternoon, ladies and gentlemen. I'm Terry E from XRPay. Maybe later you forget my name, but very simple. When you see me, just say, bro, how's doing? Brother, long time no see. This is very simple, right? Okay. We provide payment solution to micro, small, and medium enterprises in Malaysia under brand name XRPay, meaning excited to pay. In fact, there are other meanings too. For a Cantonese-speaking person, they will pronounce it as Asai Pay. Asai in Cantonese means boss or tauge, means boss, bayar boss. No need to think, bayar. Okay. For Hokkien, they will pronounce it as Asai Pay. Everything can pay, no problem, can pay. But of course, we don't process any illegal activities transactions. These are the 3 core values planted in our team. We are committed to provide a top speed and tailor-made payment solution to MSME. Of course, our solution also will help merchants, we call merchants, right, to grow their business. Let's talk about history. I started the company back to 2019, and then we have managed to register as a merchant acquirer with Bank Negara in 2002. Actually, it's late of 2020. But of course, you know lah, COVID here and then COVID there. After that, COVID everywhere. So we only started to acquire merchant actively last year. We have developed 4 types of payment solutions for MSME. Let me share with you one by one. If you are selling products or services over the internet, we have eCompay to facilitate your online store or mobile application to accept multiple payment options, such as credit cards, debit cards, FPX, e-wallets, buy now pay later, and card installment as well. If you do want to collect payments online without having a website or mobile apps, you can use our XRPay to meet solutions. Through our platform, you can create a secure payment name which can be shared over the social media platform like IG, WhatsApp, Facebook. Your customer just click and pay to you. Once the payment is made successfully, you will get a notification, real-time notification, and then you just fulfill the order accordingly. If you do want to collect the payment on regular basis, such as membership fees, or maintenance fees, or any type of subscription fees, you can go with our recurring payments. Through these recurring payments, so we will help you to automatically deduct payment from your customer bank account based on the schedule you define, either weekly or monthly. And last, the last we have is retail pay. Obviously, it's the payment terminal, which is designed for brick and mortar shop. Through this terminal, you can accept Visa, MasterCard, as well as doing now QR. Okay. Besides the 4 types of payment solution that we have developed for MSME, we also offer other value-added services. We provide attentive support to our merchant when they have questions. We are not using ChatGPT or any AI tools in our customer service. So definitely you always deal with a human, not robot. Our fee structure is affordable for merchants. We are not asking them to pay few thousand to pay for that. So we make sure that everyone can accept payments online. And then we also will continue to enhance our payment system to deliver new feature and function to meet the merchant's business need without additional charges. Here are some of our partners working together to promote cashless society. Okay, if you do want to collaborate with XIPay, just give me a call. Say, hey, bro, hey, how's doing? Let's yum chai, work together. Okay, so I'm happy to collaborate with anyone. But a lot of people always ask me, hey, Terry, what's so special about XIPay? Oh, so many players out there doing the same thing, facilitate merchant to accept payment. What's so special? Okay, today, let me introduce pre-settlement. What is pre-settlement? Okay, if you go out there, you talk to the payment solution provider or even banks. Okay, sorry to say that. There's a common term called settlement period. Am I right? So usually you can hear is T plus 1, 2, 3, 4, whatever you name it. Okay. So under a pre-settlement, our settlement period is T minus. It's minus, not plus. Okay. How it works? We are leveraging merchant performance data to create this solution dedicated for micro trader for emergency purpose. For example, when happened kebakaran or banjir, right? So the micro trader, the business owner, forced to use their working capital to fix their house. But tomorrow, they still need to open the store to sell nasi lemak. But without cash, they cannot buy nasi, cannot buy kacang, cannot buy ikan bilis. How to run business? But with pre-settlement, it can help them. Definitely can help them. So this is, if you have any questions or you want to collaborate with XIPay, this is my contact. My LinkedIn, and then there is a QR code, WhatsApp. You can add me through WhatsApp. But to all MSME out there, okay, you remember, how to say, XIPay actually is always be with you to help you to grow the business. And then why so special our pre-settlement? Because it will help you during the emergency purpose. So kita hendaklah sentiasa bersedia untuk hari hujan. So you have to start to using XIPay today. Thank you.
Can you take a photo? Just. All right, with that, ladies and gentlemen, let's give a huge round of applause for our 3 amazing startups. Did our amazing pitching as well under the speed pitching session. Thank you so much. Excited Pay. So I asked him if I should pronounce it as XIPay or XIPay. No, I was asking him for how to pronounce it, and he said, I will explain later. So now I get it, why it's Excited Pay. So can we have the lights for the audience, please? I cannot see them. So without further ado, we have come to the end of day 1 of Payment Innovation Showcase. Tomorrow we have more pitching and panel as well, and it's a half day. So tomorrow is Friday, yay, so we can go back half day. So although it's half day, we still have power pack speaker lined up. So please be sure to tune in, come back tomorrow. Registration open at 9 a.m. So once again, can we please give a round of applause for all of y'all for staying until the end, the last audience standing. So thank you so much for staying until the end. So if you are driving today, the parking is RM10 flat rate and no validation is required. So without further ado, we'll be back tomorrow for day 2 of Payment Innovation Showcase, everybody. Please drive safe. And there's tea and refreshment served outside. You know, the tea that we brought to the end of the event. So please have some tea and have some refreshment before you go back home. Thank you, everyone. Drive safe. Thank you.